You don't have to ride to take me in. All right, guys. Sorry about that. Margin calls suck. Margin calls suck. So I don't wish it on your worst enemy. It's not fun. Um, Good evening. How's everybody doing? I am here. I am here. And I'm here. I'm not prepared because it's Thursday night. Uh, normally, you know, normally I am, I don't know. I guess sometimes I stream on Thursdays, but it was suggested that I stream today because, boy, the kitchen's really starting to heat up. The kitchen is getting hot. It's getting hot in that damn kitchen. And the funny thing is, there was a video that came out that basically said the same. It's getting hot in that kitchen. Starting to heat up. This is the Hall of Grifters. And I don't know if you notice, there are some changes on this Hall of Grifters. First of all, we have John Wick Snipin, who is not officially, but unofficially MIA, right? We don't know where the hell he went. He hasn't been seen for 3 days. And, you know, and in AMC Grifter time, that's a long time. That's like almost two, it's almost like 2 full snake oil cycles, maybe. So John Wick Snipin is MIA. He hasn't posted anything. And I said, you know, he just realized that the MOAS is a fantasy that he bought into a lie not that long ago. So, you know, first he kind of had the tough guy response, but it takes a while to process that stuff. So he's probably, I wouldn't be surprised if he and Jack got together next to the pool. Poolside honesty. That's what I would do. Not with Jack. Then we have Al from Boston added. It's time. It was past time. Al from Boston. Right here. Look at that face. Does that instill confidence? I don't know. No, not really. Not really. Probably not even him. Probably not him. But anyway, we have a representation of Al from Boston on the Hall of Grifters now, at least. It's a placeholder. It's a simulated Al from Boston. Simulated Al. Let's see. I don't have my chat display thingy set up. So maybe if we get into a video and I'll do it, but I'll just read what Chris says. You got to take CS trades off the panel. He was shamed by the community. No long puts out streams. No longer puts out streams. Gotcha. I thought you were talking about long puts. Thought you were talking about long puts, my friend. Guys, yeah, CS trades, I could do that. I already closed Illustrator. Since we're just getting started here, I'll do it in the background and I'll update that. I will update that. Appreciate the tip. I do remember that, you know, but to be honest, truth to be told, as Kia Evangelo would say, truth to be told, I forgot about him. You know, he's that kind of irrelevant anyway before all this started. But yeah, what a weirdo. And yeah, I mean, that's what happens. That's what happens when you try to work to change things. You put out a I don't know, buggy or hacked with some kind of rootkit WebEx client. Which, by the way, why are you using WebEx anyway? Like, who the hell uses WebEx? Like, CNN uses WebEx, right? Live via WebEx. That's the only place I've ever seen it. Like, when everybody else was using Zoom. That was a red flag. Should have been a red flag. But, yeah, it's good to know that he's officially out. Now, what about Review Dork? I haven't seen shit from him lately. Is he still doing this? I don't know. I'm going to have to look. So this is kind of a viewer's choice stream, I guess, in a sense. The members of the Telegram chat group have provided some video links over there that we're going to watch. And we'll do that momentarily once I get this image fixed here. This is serious business. You know, if it's gonna be, you know, the patented grift watch technology, it needs to be accurate. So now that leaves a hole here. That leaves a hole. So that's okay. That's all right. You know, who says that all the spots have to be taken up? We can adjust and leave a spot. We'll leave a spot for the next contestant. I don't even know. I honestly, I don't even know who mediocre trader is. He's that mediocre, I guess. But I'm just gonna leave him there because I wasn't advised about him. But I did watch a couple of their streams, and yeah, he seems like he's on board with the whole more-ass thing. So we'll leave him there, and then we'll just put a placeholder here in a lorem ipsum. Kind of is fitting because it's meaningless, but you know. Okay, let's put that there, and then we'll have this on here, ready to go. Who's the next grifter? All right, there it is. Okay, so I just gotta save this real quick. Just gotta save it. And I saw no hope for the 57 generation in here a minute ago. Is he still here? You know, we just move past it. We move past it. We don't dwell on the past. There is no reason to dwell on the past. So that's all I'm going to say. Okay, so that's that, and then close this out. Save it, of course. Hello, TWA. I think this is the first time I've seen you in a live stream. But I've stayed up way past my bedtime reading your comments. Various books, volumes that you've written, and I do appreciate it, my friend. So let's see, I just need to add one letter to this, and there it is. So now we have CS Trades Wolf Pack, Alpha Wolf, gone, Gandhi, and who knows who the next grifter will be there. The spot is reserved. But then also down here in the bottom left, we have Faceless Clay, which I know, Faceless Scott. But I understand, you know, Clay. I don't understand Matt Stoner because he's an actor. Why would you want to be associated with this? Clay probably wants to actually do something with his life later, so I wouldn't want it associated with my likeness either. I feel like Boss Blunts should be a little bit more prominent. We'll fix that. I don't even. This guy here might just get taken off. Maybe we'll put Boss there. Maybe we'll put Marco Metzler in there. I don't know, but you know, it was just a thrown together thing. So also, I didn't notice this before. I can't believe I did not notice this. But did you notice that Thomas James is actually wearing a shirt that says bullshit? I mean, that's not obvious or anything. I thought it said bullish, but apparently I was working with this image today, and I noticed that it actually says bullshit. Crazy. So another question I have: what is the deal with TMI and the mask off thing? Has there been any movement on that, or is it just the same bullshit, like clickbait on that too? I don't know. Okay. So today in the market, today at AMC, today in this day in grift. You know, I'm not going to do a play-by-play analysis. You guys know what the hell happened. I mean, people could see the effects of what transpired. Let's say it that way, right? This happened in the NASDAQ. Let's see, AMC or Amy. What happened with Amy today? They're chasing Amy. Okay, this happened. Which, you know, yesterday looks more like today in the market. Today, you know, and look at the volume, like spike, and then, you know, an impulsive type action. That's what I kind of think of that as. Whereas yesterday was kind of, you know, different profile, if you will. So, yeah, that's what we had there. And because of this combined, what is this here? Let's just say from here, because of this combined, you know, 16% essentially, which is really $1.68. $1.68, and I'm not even taking it to the right levels, but, you know, I'll give you 17%, whatever. You know, less than $2. Wow. A lot of millionaires made today. You know, it was thought that the grifters be out tonight. The cook's in the kitchen late, working late. So here we are. You know, here we are. So and already I can already see. And you have to excuse my connection here. When high-speed internet. Whenever MOAS. So that would probably help. Just trying to get my system optimized here. So we have Al from Boston. AMC wrap up. The final act. Computer-aided simulation inbound. Patrick Byrne interview invite sent. Wow, I mean, I could put on there Dave Lauer invite sent. Whoever invite sent. You know, Gordon Gecko invite sent. Space call. We may have to check that out. But I love this, like, you know, it's by insisting, like, Lou did this too. Like, AMC's after AMC thoughts. This was last year. He was saying this shit. What are you going to invest in after AMC? And it's like this big mental exercise to keep you, you know, engaged, keep your emotions like, oh yeah, I got to remember why. Manipulative. You know, just doesn't really begin to describe it. But company servicing hedges says money will soon flow in the retailers' pockets. Out of the retailers. It will flow inside the pockets, out of the pockets, to the company servicing the hedges. I'm not sure what kind of service that is. And here's the thing about this insistence, willing it into existence. This is going to cause a lot of people to irrationally FOMO buy certain securities. It already has, I'm sure. I did not look at this, but it's only one brokerage, but okay. So what do we got here? Amy. Well, actually 2,300 buy orders, 1,500 sell orders. I mean, I thought it would be way more imbalanced, but GameStop, you actually had more. Wait, what? More sell orders? With a $13 move? 11.5%? Oh my. I thought they were the hardcore apes. The ones that... question. Where's John Wick sniping at? So, I mean, of course, you've got a decent amount of selling up here. And then back down here. And then this is just kind of a consolidatory. And then you got some short covering there and after hours, likely. By the way, too, based on these numbers, based on these statistics, and you know, look at the volume, but looks like it was mostly short covering on both of these things today. A little bit more volume on GameStop. What about AMC? What was the volume? 71. I mean, you know, 1 year ago you had basically 10 times that. So I'm not impressed. But it's not about impressing me. So, that's what happened. Pretty, you know, whatever, higher than average volume, but still, you know, fairly weak comparatively. I mean, here's the thing, you know, this volume is 1/10 of what happened last year. Why would the apes expect this with that volume? I don't know. I guess we have to wait until June 2nd or 3rd or whenever it is, because the boss Blunts, he says, I heard today, somebody told me, okay, I heard it through the grapevine, that JPM, everyone's favorite bank, they're getting the money printers ready. They're getting the money printers ready. They're priming them. They are. So we'll see. I mean, it seems like potentially they had it hooked up backwards. They had the polarity off. You don't want to switch those red and green wires. Get things flowing the wrong way. So the apes confirmation bias, stoked by all of this nonsense. AMC short squeeze, they want our diamonds. The devil must cover those fake shares. The devil must cover those fake shares. So they're fake shares that weren't borrowed. They were never borrowed. This is the, you know, this is what they say. The fake shares. They didn't borrow them because that's naked shorting necessitates no borrowing of the shares. They just sell them, right? So they were never borrowed. They're fake. But the devil must cover them. You know, you can't make this shit up. You cannot make this shit up. Okay, so with that in mind, I'm gonna go grab some videos here and start at the top. So that was, is Meet Kevin a fraud? We don't need to watch that. Okay, looks like we're gonna start with stimulate and trade. It's been a while on this guy, or this thing. I don't know if it is male or female. I'm guessing it's male, but oh, okay. So gotta adjust things here. Stimulate and trade. What do you got for us? Anticipating the greatest market squeeze in the history of the world.
Hey guys. All content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history.
Oh, right.
Let's dive in. Stocks continued their rally today, with that fake pump Wall Street is doing into pretty much all stocks for the moment before they decide to pull the rug and leave gambling investors out dry.
That was a mouthful. Okay, get a little bit nicer quality. Okay.
The S&P 500 ran 2%, the Dow gained 1.6% and Nasdaq closed 2.7% up. Now, we didn't get news from GameStop or AMC today. Today I want to address the question of whether we are in a bear market or not. Analysts and investors seem to be split on the answer, so I wanted to take a moment to put in all the facts and come to a reasonable conclusion once and for all.
Good.
From a technical analysis point, when we look at the S&P 500, we know that the economy is slowing, but Jerome Powell and other authority figures still protest that it remains strong. GDP forecasted in the 2 to 3% range. Second thing are yield curves, which we
weren't those GDP numbers recently revised down? Didn't Powell, in his remarks yesterday, make mention of the dangers, basically, they were facing? He's painting it as if, the Fed is saying, oh yeah, everything's fine. And that historically has been the case, but I feel like there has been a shift. But then, surprise, surprise, and he says this too, kind of, the Fed comes out and, says that, and the GDP numbers get revised down, and Snap comes out with their, insightful research, because we trust Snapchat, to make that type of analysis. All that stuff comes out, all that bearish stuff. Everybody's now bearish, in the market shoots up with a short squeeze, short covering rally from hell, trapping all the put buyers, put holders. Yeah, Wall Street. Gotta love Wall Street. Okay.
We have devoted endless videos explaining. Current yield curves suggest a recession is likely to occur in the next year or two, and with talks growing in the markets, investors and consumers are likely to bring it about indirectly by spending less. Then, when we look at the state of inflation as it is, there is little argument to be made that the Fed is going to maneuver around it carefully and bring it back down without rocking a significant portion of the economy.
Okay.
The excess liquidity that was brought about by the endless printing by the Fed drove up demand. Mix that with the pandemic shutdowns in China, making supply recovery unpredictable, along with Ukraine and then the semiconductor shortage, and you get an economic outlook that looks terrible, even if you were to factor that the worst already came to pass. The narrative that the corporate media is driving is that though things look grim, they aren't all that bad. I disagree wholeheartedly, because from a fundamental value perspective, once PE rations begin to revert back to normal, stocks will have as much as an extra 20% room to fall, and this isn't factoring investor psychology, which can expand this room for loss another 30%. I have been saying and still abide by the belief that prices for stocks are likely to fall down to around the same value that they were around in 2018, 5 years ago. Anyone telling you markets are now fairly valued because growth stocks have fallen 50% are incredibly deluded, because even at half their valuation, they are still not even...
This is my opinion, and by the way, it's not a professional opinion. I'm not getting paid for any of this. I don't get paid to do anything with finance, and I don't get paid at all on this channel, so I appreciate the vote of confidence and, patronizing me, saying professional opinion. Thank you, but this is personal opinion. This is completely personal, just based on my experience as an individual retail investor. That's it. All I wanted to say was that the picture that Stimulate and Trade is painting here, it seems accurate. It seems accurate, but he's talking. Just because that's the case, it doesn't necessarily imply that the market is pricing that, because the market is pricing 3 to 30 months in the future, depending on kind of how acute things are at the time. So, and I don't know where it is in that right now, but I'm just saying that the conditions on the ground now and in the next, even the next 6 months, if the market is looking past that, if the market is looking into 2023, 2024, potentially even, then he's behind the curve. He's He's talking about now and in the near term future, and the market will be looking past that, looking into next year, and that's important to keep in mind. So the market is, you know, I guess I have to say it. The market is efficient in pricing into the future. So that's the conventional wisdom. That's the way that it works. I'm not going to fight that. I'm not going to fight that. I'm just going to embrace it. But in other words, whatever the news is saying now, whatever people are saying now, the market has known about that shit for far longer than people have, regular people, lay people have known about it, and they've already incorporated that into their price. And since institutions basically control the price because they're the biggest market participants. And the media, once the media gets a hold of something and, you know, decides that they can sell it to the public, it's, you know, so far outdated, you know, essentially. So just keep that in mind.
Close to being worth that amount in many cases. Though we might not technically be in a bear market by economic definitions, that doesn't change the fact that all other indicators are pointing to that we are indeed in one. The little rally we have seen these past couple of days is just a fake pump. There is barely...
Okay, so I guess I have a question, you know, to throw back to you. Does it matter? What is it? Who cares? Is it a bear market? What difference does it make? Is it going to change the way that you look at things? Is it going to change your habits? Is it going to change your outlook? Is it just, you know, you want to know, people want to know what to call this or whatever? It's a correction, whether it's a bear market or not, or I haven't really thought about it, to be honest with you. It's not really important to me, the labels, I guess. But that's probably that could be, you know, that could be a difference of you know, personal approach or, you know, whatever. But the stock market is down. Stock market is down. Is it a crash? Probably not a crash. It's not a crash really. But it's not uncontrolled either. It's not uncontrolled and unpredictable. We knew that this would happen, basically. And it was just a matter of when. Even last year. Some of us, you know, are thinking, this is unsustainable. This is, you know, why is it still happening? What the hell is Jerome Powell doing, etc. So, whether it's a bear market or not, I don't know. But look at the Fed actions. Look at, you know, the situation, and you have here's a very, you know, this is a bear market is a emotionally loaded term, I think. So I don't like to be influenced by that stuff. So what I said to somebody the other day was that the market is undergoing drastic repricing. Drastic repricing. It's a little bit more, you know, family friendly, I guess. I don't know.
Any inflow in the market as we speak.
Now, oh yeah, sorry.
Pointing to that we are indeed in one. The little rally we have seen these past couple of days is just a fake pump. There is barely any inflow.
They talk about this a lot. They say this kind of stuff, right? The little rallies that we've seen the last couple of days, it's just a fake pump. What do they mean by that? What is a fake pump? Like, what is the purpose of a fake pump in stimulating trade's mind here? A fake pump. I mean, I know what I'm fairly sure took place. But the problem is, and this is the problem with bias, this is the problem with being biased. Because the apes have deluded themselves, they've told themselves, they've been told, and then they tell themselves, and they tell each other, that shorts haven't covered, and that when the shorts cover, there'll be this massive short squeeze. But, you know, the thing is, no. So when the shorts cover, which is basically all the time, because it's not like a binary thing. Either they're not covering or they're covering, because it's not one participant, it's not one group, it's not one institution, it's anybody in the market who thought the price would go down. So a lot of people did. A lot of people do. So, you know, you don't have to worry about who it is. It doesn't matter. You'll never know who it is anyway. But all those people sold into the market at different points, at different prices. So, and every participant has a different profit target. So, you know, when are they going to cover? Well, that's, you know, who knows when they make money, or if they start losing a lot of money. And that's the short squeeze. That's the short squeeze reality, or that's the short squeeze route. Not, oh, we have profitable short positions, we're going to take profits on them. Or a lot of market participants that are shorting AMC will take profits on them. That's a short covering rally. Short covering, which happens all the time, and which happened certainly today in the broad market in a lot of stocks. So, but they've set up this expectation that when it, quote unquote, when it happens, that it'll be this massive thing. But they, you know, and I've said this before, the apes and the ape influencers, and mainly the ape influencers, really, these guys, you know, most of these people are fairly inexperienced and don't have like a good grasp of like market dynamics and like the fundamentals, not the fundamentals of the company, but like how the market works. And I'm not talking about FTDs and you know, all these FINRA filings and all the market plumbing stuff, just basic concepts of the market, like what causes a stock price to go up and down, those kind of things. How does the limit order book work? How does the, you know, limit order book, how does that work? How does that factor, how does that, you know, relate to the price? Those kind of things. What is short selling? How do you identify short covering? And I have some interesting information about securities lending too, but I may not even get to that because there's so much here, and I go off on tangents, so I'm sorry, but sorry, it's sorry, not sorry, but the reality is, like, there's a lot, and I'm not saying that I know everything either, but you know, I've tried to be objective in this. Once I saw what was going on, then it was very clear, and it became easier for me to get rid of any bias that was there, and just seek the facts and to learn about the stuff, you know, on a different level. So a lot of retail investors don't short stocks, so they don't really have a conception of it in the same way. But the reality is that it's, you know, it's a standard function of the market. It serves a purpose, and these positions are kind of cyclical. So you're trying to capture a decline in price. Now that could be a short-lived decline in price. And you see on Ortex, I know, you see on Ortex this average age on loan, and it's like an astronomical number. But on, you know, on a daily basis, on a weekly basis, you see lots of shares returned. We know that that's only a certain percentage also of the securities lent, and also it's not real time. You know, I've talked about this before, but you know, there's this belief because of people like this, the Ortex guy on Reddit, that, you know, that they borrow this number of shares today, they return this number of shares today. I mean, this, if you didn't know and you didn't understand the kind of timeline of this data, which Ortex even talks about, you would say, well, they only returned 625,000 shares today, and you're telling me that there was short covering today? You're telling me that there was short covering today? Well, these 15-minute candles are 8 million, 7 million, 5 million. So if this was short covering and they returned the shares, how would this only show 625,000 returned shares? And that, that's kind of a valid question, because this has been so misleading. It's been misrepresented. But nothing happens instantaneously in the market. That's the thing that, the apes are used to instantaneous results. They're used to paying with Venmo and Cash App, or just even just an ATM card, and you can see the balance reflected instantaneously from the transactions. But it's not like that with this fragmented, largely privatized market. Not that the banking system isn't, but so what does that mean? Well, we know it takes 2 days to settle trades, and the securities lending happens basically as part of that process. So basically, at the end of the day, if you want to just simplify it, this data is 2 days old. Any shares that were returned today, they settled today. Today is T+2 for them. So you have to look at T-2, 2 days ago. So Tuesday. Now, I didn't look at Tuesday, but yeah, here's Tuesday, the 24th. And so we see quite a different profile here, quite a different impulsive type of move on Tuesday. Now, that makes more sense. 500,000, 2/3 of a million shares returned. This looks like way more selling than buying, right? Well, what does Ortex indicate? Potentially way more selling than buying. So this is something that I've been talking about since last year on my first channel that was deleted. So this is what happens when you work to change things, right? First they say you're crazy, then they fight you, and then you change the world. So I not really. That's a route to prison. That's the prison path. But anyway, so you have to be honest about this kind of stuff and just say, hey, let's just look at Apple, for example, and let's go down to 3-minute candles, just to stretch it out a little bit. But hell, let's just go down to 1-minute candles. Screw it. So no, I changed my mind. I'm going back to 15. I had it right the first time. So I'm zooming out. Seeing this large, this here today, and it's like, well, this just cut through so many price levels. It cut through areas where there was low volume recently, lower volume. Cut through areas where there was a lot of volume. It kept going through, punched through those areas. It punched through more areas with less volume. And just went and just continued. So that's like market orders, basically. It's the market orders that are just following the price as it goes up continually. So generally, institutions don't use market orders in the normal course of buying and selling, but with short covering, they do. So you see the price chase itself up like that. And I've talked about this, and I could go into more detail sometime, but these large moves, I mean, that's another dead giveaway is just insanely fast and powerful, upward momentum, even on small time frames. And nothing goes straight up. So yes, there's some pullbacks and people taking profits and whatever else, but and this relentless until it gets to, you know, some kind of zone. So this happened all over the place today, in a lot of names. To varying degrees. It also happened near the end of the, well, for some stocks it happened out here more than not, but more than others. But okay, so when he talks, to bring it back to this, when he talks about a fake pump, that really doesn't mean anything to me. Like, what is a fake pump? Why would anybody do a fake pump? It costs money to buy stocks. Well, unless you're buying to cover, unless you're covering a short position, and then technically, yes, you have to buy it, but you've already been paid for it at a higher price. So, you know, it's a profitable sale, it's a profitable purchase, right? So, in the context of understanding these market dynamics now, when you hear these people talk about, oh, it was a fake pump, you have to question, okay, what does that mean? Why would that happen? Or was it shorts taking profits, closing short positions, buying, looking at the totality of the situation, especially coming up on the end of the month, going into this long weekend? No, yeah. Fake pump, not so much. Short covering rally, yeah. Yeah. Okay. Hi, Antoinette. Welcome.
Flow in the market as we speak.
Okay,
but
let me go back so we can...
stocks have fallen 50% or incredibly diluted, because even at half their valuation, they are still not even close to being worth that amount in many cases. Though we might not technically be in a bear market by economic definitions, that doesn't change the fact that all other indicators are pointing to that we are indeed in one. The little rally we have seen these past couple of days is just a fake pump. There is
little rallies we've seen is just a fake pump. I just went on the whole thing about short covering rallies, and just qualitatively, you know, fake pump. That's a pro term. That's right. That's a professional term. Okay.
There is barely any inflow in the market as we speak, but stocks are rallying as if Jerome Powell came out to speak and said they miscalculated inflation and the number is much lower. Don't fall for this rally, because it is a trap by big money. I consider the current state of the market as bearish and think we are due another huge drop in coming weeks or months.
I thought he was going to maybe say
Let's talk about today. The Fed submitted over $2.007 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted 55% of the total volume today. AMC had a bullish day, gaining over 2% for the day. It opened to a bull run that took it from 11.60 to 11.88. After this run, AMC began dipping, falling as low as 11.90 before a bounce that led it to a closing price of 12.23, below the VWAP. GameStop had a bullish day, gaining over 11% for the day. It opened to another big run from 116 to 148 before dipping down and finding support at 127. It remaining bouncing up from this support line and trading sideways for the rest of the day.
Sorry.
Enjoy the rest.
Yeah, that's it. That's it.
Hey guys,
that's, you know, that's a typical play-by-play type video. It doesn't just scratches the surface of you know, something that's more complicated, and it misses the point. It doesn't synthesize anything. Doesn't present. You know, if you're writing a paper, an essay, it would just be like you just stated all these facts. You know, this happened, and then this happened, yeah, this happened. But you're not saying anything about them. You're not putting it together and making an intelligent statement. You're not putting forth some thesis. Like, here's what I'm trying to tell you. Now, I guess maybe he's saying, oh, yeah, okay, this fake pump, don't believe it. It's bullshit. But I mean, that's what I have. The people in Telegram chat know, and I'm like, oh, this is bullshit. It's not going to hold. Who in their right mind would be buying right now? Yeah, that's a duh. That's a duh moment. Not sure. That's not really an intelligent, in my opinion. But you have to recognize that shorts are taking profitable positions off, and then probably putting some positions back on too. Okay, so next we have common sense investor. Common sense investor with a marijuana cap.
What's up, everybody? It's the Common Sense Investor coming at you
he's
with
a pothead.
another video. And
I want to do an experiment. 1080. Boy, 1080 isn't what it used to be. It's really amazing how many of these influencers and ape people are, not really bashful about their drug habits. And I'm not judging. I have no problem with anything that anybody wants to do with his or her body, but if I were trying to be credible, anyway, it's a social thing. It's about creating, the vibe, I guess. So let's see. Now, Manny says, what did he say with this one? Manny's comment was CSI referencing old SEC post. Old SEC post. So I don't know how old. Maybe he put a link. Now that's too much to ask. Lux Algo. Look at that. Lux Algo. That's Andrew No Money's thing that he talks about. Tries to sell. Ooh, that's old. That's old. You need to get that out of there. Webull. So most of these guys have moved on from Webull. Whatever. But I mean, this obviously this expired. So first trade, TWO. Oh, public. Sorry, public. So Webull, first trade, public, trading view, Lux Algo, and then we get down into this. Social media contacts. Shiba Inu burn party. Okay. Giving people expiration dates and taking super chats during market hours and saying not financial advice. Lou called this over a year ago. People get mad about him not showing lines and arrows. But he was right on this. Saying you not an advisor while giving advice, not going to help you. They have to show impartiality. That includes going after retail. Okay, I don't, a little bit misguided there, I mean, the thing is debatable as to whether these guys are financial advisors or not, but probably not. Probably not in terms of the Investment Advisors Act of 1940, I think, or 44. It's an old act, originally been amended and all that, but basically it defines what is a financial advisor. And we can look at the basic points of it, and we maybe come up with what is thought by the consensus. But let's see. I guess Investopedia. So it regulates and defines the role and responsibilities of an investment advisor. Okay, so provides legal groundwork for monitoring those who advise pension funds, individuals, and institutions on matters of investing, specifies what qualifies as investment advice, and stipulates who must register with state and federal regulators in order to dispense it. Okay, so that's key here. These guys aren't registered in any way, but they really don't have to be. Okay, investment advisors. Okay. Is talking about all of this. All these regulations came about as a result of the 1930s, end of the 20s, 1930s, Great Depression. that period when the market was essentially unregulated. And the apes and retail investors think that the market is a kind of a Wild West free-for-all now. I mean, you didn't have the SEC. You didn't have the Securities Exchange Act. You didn't have the Securities Act. Those were from 1933. This act is from 1940. So, as a result, basically. So, and fraud was rampant. I mean, it's really actually very fascinating history. But, so, fiduciary standard, pretty specific in defining what a fiduciary means. It stipulates a duty of loyalty or duty of care, which means the advisor must put their client's interests above their own. Right? So that makes sense. Okay? But we'll get past that. An advisor cannot buy securities for their account or his account, the advisor's account, prior to buying them for a client. That's front running, Al. And I corrected him on this the other night, but here it is, black and white. That's what front running is, not what high frequency trading does. That's latency arbitrage, but I'm sure you know that. Prohibited for making trades that result in higher commissions for the advisor than or the investment firm. They call it churning. You have to make sure that the advice is accurate and complete, and best execution. Right? You have to get them a good deal. So, 3 criteria: what kind of advice is being offered, how is the individual paid for their advice, and whether or not the lion's share of the advisor's income is generated by providing investment advice. So, as a primary professional, that's their primary professional function. If an individual leads a client to believe they are an investment advisor by presenting themselves like that in advertising, for example, they can be considered one. So, in the case of these ape influencers, most of them are fairly clear about not being a financial advisor, for example. So, that may or may not be, a legally binding disclaimer, but in terms of what is considered a financial advisor, most of the time you'd have people. The fraud would be convincing somebody that you are a financial advisor, like I'm a professional, and misleading them in that. So not the other way around. Anyone providing advice or making a recommendation is considered an advisor. Individuals whose advice is merely incidental to their line of business may not be considered an advisor, however. Some financial planners and accountants may be considered advisors, while some are not. Okay. Advisors with the $100 million in assets. See, obviously, these guys don't have $100 million in assets. I don't think. The value that Dodd-Frank, all this stuff, but essentially, hedge fund managers, private equity funds. But let's just say that I'm a regular dude. I'm working somewhere, and somebody at work asks me, "Hey, Scott, what stocks do you like? Well, what's going on in the market?" They know that I trade stocks or whatever, and we talk about it. And I say, "Well, I can't tell you what to do. I'm not giving you advice here, but here's what I think." That's akin to what's happening here, I think, on a bigger scale, obviously. But nobody should be under the impression that this guy is a financial advisor. That these people are financial advisors. That doesn't mean that some people don't, accept it as financial advice, and they are certainly making decisions based on it. But, is this guy making his living directly from that? I don't think so. So then what about somebody like Trey? Is he a financial advisor? I don't think he is. He's not. He might make more money, might have made more money, but again, he's not. It's not really a client, professional client relationship, and they're clear about not being financial advisors. So I was never really worried about that with these guys. I don't harp on that. I have talked about it before. I talked about it last year, basically with this Investment Advisors Act. But basically, you know, this somebody can I can come on YouTube and make a video that's extremely biased and say, you know, I think this stock is going, you know, here and everybody should buy it, and you know I'm buying it, and let's all buy it, and we're gonna be so fucking rich. And so what? Like, who cares? Like, I'm stating my opinions. Now, if I were listening to somebody saying that stuff, I'd be like, who is this? Who is this jagoff? Who is this jerk? Who is this asshole saying this shit? I don't know who he is. I'm going to look into it, maybe, but probably not, because people are idiots. So I think you just have to kind of let it roll off your back like that. Unfortunately, that's not what happened here. Okay, I'll actually play the video now. Sorry.
What's up, everybody? It's the Common Sense Investor coming at you with another video. And tonight, I want to highlight my buddy, Caesar Jean, right there. And he has 168 followers. He deserves more than that. I once had him on my show, and I thought I'd ease over here and see what he was up to. And I'd be darned if he don't have a video here talking about the SEC is going after social media influencers. Hello. He quotes this Twitter post by the SEC that says, "Today we charge a social media stock promoter who told his millions of followers to buy penny stocks while he allegedly sold them to line his own pockets." Now, people laughed at me when I said it was coming, but here...
Okay, so I'm sure that some people probably are going to continue to laugh at you, or with you, or whatever. But yeah, let me zoom in on this here. I probably don't even need to do it. Probably already saw it, right? But you can see here that what we have 2/7/22, February 7th, 2022. So I think I actually remember this. I think I remember this when it happened. I don't know if we talked about it. It probably made the rounds in the Telegram group, and if I had to guess, I would say that Lynn probably posted it in there, because she gets email alerts from the SEC enforcement, and you know, usually posts those in there, and it's interesting to keep up with that. It's another reason to join the chat group. So yeah, no, it's certainly not what he's saying it is, and Manuel is right, and you know, he's usually right, and you know, we try to be more informed. That's all. It's nothing really, you know, it's just, it is what it is. But when it's right there on the screen and you're saying that it's, when it's right there on the screen and you're saying that, oh, I told you this was coming, well, okay, you know, I don't know. I don't even know if it's really worth watching this. I mean, I'd save him the embarrassment of not even watching the rest of this. We don't need to, because it's wrong. It's old. Okay, what's next? Okay, I put in here. This was, I believe this was mine. This is my contribution. And you know, I can't believe I missed this last night when I was railing against short the VIX in the chat, but well, probably because this video came out today, so that's why.
What's going on, guys?
What's going on, guys? But I was listing all these things that keep coming up in a cyclical manner, like margin calls, forced share recalls, forced liquidations. You know, SEC investigation. Well, I don't think I even thought, I totally missed gamma squeeze, but gamma squeeze, FTDs, you know, gamma squeeze incoming. Really? Okay, well, I'm sure he's going to show us.
Another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is a little bit of the technicals that we're seeing on both AMC and GME right now, the absolute craziness that we're seeing on the ortex data For both of these stocks, the cost to borrow, short interest, the all-time high shares on loan, everything is going pretty wild. But the other two things that I want to get into is one, the potential for a gamma squeeze coming up.
God, are you kidding me? Seriously, how many times? I really would like to know. I mean, it was, you know, it was crazy for me to go back and add up all the Ortex return shares, apparently. So I'm not going to go look on his channel and see how many instances of gamma squeeze incoming there are on there. But I mean, it's got to be dozens. It's got to be dozens, because it was like every week before. And so every week it was gamma squeeze was coming, and then it was multiple days that week that they were hyping it. He was hyping it. So I mean, I can't even believe that he can say this shit with a straight face. It almost sounds like he is laughing or smiling to himself when he says that. I mean, I don't know.
The all-time high shares on loan, everything is going pretty wild. But the other two things that I want to get into is one, the potential for a gamma squeeze coming up, because we are seeing some aggressive activity on the option chain for both AMC and GME right now. Jesus. But we also have the SEC coming out and confirming that they're investigating manipulative practices on AMC's share price. Now, what happened here was one of my subscribers submitted a Freedom of Information Act request to the SEC. This took forever. Ooh. They just sent him back a letter, and we are going to be going over that letter. I tweeted it out today. I took screenshots of that letter. I have the exact thing. I know it's completely real. I have the exact document. I've just screenshotted and cropped out his personal information, so that is not shared with the overall public. Yeah. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button.
That's the stretch. Yeah, it's interesting. GameStop, apparently investors, Fidelity investors know that too, because there actually were more sell orders on GameStop today than buy orders. 3284 sell orders. That's not shares, it's orders. 2816 buy orders. So Fidelity customers tend to be, more sophisticated, I guess. But then, you have AMC 2308 buy, 1533 sell. So maybe not. I'm just kidding. But I mean, but here, apparently retail investors know too. We have that here as well on the daily candles. So, I mean, I can't help but notice a similarity of what seems to have formed here to what seems to have formed back here in March. So, is it going to continue to go up? Maybe. Well, why do I have all these? Yeah. There we go. You see the same characteristics. Increased volume, these big candles, large moves, double-digit moves, 30% yesterday, 11.5% today. Got earnings coming up. Had earnings coming up before. Oh, what is the I guess it's the Chinese stocks, right? That's the catalyst now. That's why. But I mean, you're gonna see this do something very similar to this. Essentially, stimulate and trade would call this a fake pump and dump or a fake pump. But we saw retail investors mostly sold GameStop. I mean, it's fairly close, but it's not that many orders on either side. But anyway, the fact is, at least on this brokerage, it's more selling. So who bought then? Well, institutions, probably covering shorts. But I hear, anything could happen, right? I mean, this could happen. That could happen. Like Judy Tenuta. It could happen. It could happen. Okay, yeah. That could happen, but I mean, it's probably not likely. It's probably, you know, going to be more like that. But I don't know. I don't know. But I'm just, you know, charts are about looking at what happened previously, you know, and kind of like analyzing it and saying, all right, well, we have a lot of volume at this level here. This red line, that's a control point in this volume profile. And it's, you know, it's interesting that, you know, once the price kind of, well, we were below it there. There we go. In this last, you know, basically year. Once it got below this point, it kind of didn't go back above it. It now acted as resistance. So, you know, I would go with it. It would probably, there's a good chance it may act as resistance again. Especially given the fact that, you know, retail's not crowding into the stock because they can't. So, yeah, back to short the VIX. Oh, I let that play, and I mean, you can hear the uncertainty in my voice. Do you see the uncertainty on this chart, sir? Like, you know, never mind what you think about my voice. You know, clearly you don't know how to read this chart. Like, let me go back out here. Oh, look at all these times it happened. Here, 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 here. Oh, what did it do? Oh, this time will be different. This time will be different. Maybe you just need to pray more. Pray more on it. All right. Let's hear the ortex FUD. Let's hear the ortex data be misrepresented. Where's Lynn at when I need her?
A little bit of a look at the ortex data right here and compare AMC and GME. Let me give this a little bit of a quick refresh right here. We have 15.03% max cost to borrow on AMC right now. The average is now 8.44%, which has stepped up pretty significantly over the last week when we had cost to borrow of 2 or 3%. We have 22.6% estimated
yearly
interest right now, but shares on loan 170.08 million shares. That is 33 or 32.99% of the overall free float. These are absolutely crazy numbers. GameStop is even crazier right now. We have 27.6%
so
estimated short
of the
interest,
short is floated?
158% average cost to borrow, 261% cost to borrow max, with 35.6% of the overall free float on loan. This is absolutely insane. Now, let's kind of get into what we're looking at with this Freedom of Information Act request.
Okay, here we go.
And what has been said by the SEC in response. So when we come over to my tweet right here, so this is from the letterhead. I wanted to make sure we had the SEC on here. This is a screenshot of that document. We have the RE Freedom of Information Act request, and then here is the bulk of the information right here. This letter corresponds to your request dated and received in this office March 31st, 2022 for...
Jesus Christ, you misread the third fucking word. God, what a clown. Yeah, this is who I'm trusting. This is who I'm trusting on the Gamma Squeeze. This letter corresponds. Jesus Christ.
And then here is the bulk of the information right here. This letter corresponds to your request dated and received in this office March 31st, 2022 for all information, emails, and documents regarding past and present investigations into the trading of AMC stock, as well as failed to delivers of such stock from January 1st, 2021 to March 30th, 2022. Now, here is the wild part right here.
Just read it.
We are withholding records that may be responsive to your request under this statute right here. This exemption protects from disclosure records compiled for law enforcement purposes, the release of which could reasonably be expected to interfere with enforcement activities. Since Exemption 7A protects the records from disclosure, we have not determined if other exemptions apply. Therefore, we reserve the right to assert other exemptions when exemption 7A no longer applies. What they're essentially saying here is, yep, there are active investigations going on, and we cannot give you this type of information at the current time, because if it is spread out to the public,
right?
It could all basically impact this investigation going forward, and the parties that are responsible may not be held liable. Now, it is the general policy of the commission to conduct its investigation.
Let's see. It is a general policy of the commission to conduct its investigations on a non-public basis. Thus, subject to the provisions of FOIA, the commission does not disclose the existence or non-existence of an investigation or information gathered unless a matter of public record in proceedings brought before the commission or in the courts. Accordingly, the assertion of this exemption should not be construed as an indication by the commission or its staff that any violations of law have occurred with respect to any person, entity, or security. Please be advised that we have considered the foreseeable harm standard in preparing this response. That directly contradicts what he said. And I knew that he wasn't going to read it. Why did he leave it up on the screen? That was a mistake. This guy is a joker.
Information at the current time, because if it is spread out to the public, it could
I want to hear this all
not
again.
determine if other exemptions apply. Therefore, we reserve the right to assert other exemptions when exemption 7A no longer applies. What they're essentially saying here is, yep, there are active investigations going on, and we cannot give you this type of information at the current time. He does this
so often. He reads, he finds something, reads like, essentially cherry picks. I don't know if he even read the rest of it. My assertion is he didn't even read the rest of it. He got to that part and was like, oh shit, I'm getting hard. I need to make a video about this. Oh God. And he didn't even continue reading it, where it literally says, the assertion of this exemption should not be construed as an indication by the commissioner or its staff that any violations of law have occurred with respect to any person. The commission does not disclose the existence or non-existence of an investigation or information gathered unless made a matter of public record and proceedings brought before the court. But I want to look at this this thing here, 5 USC 522. B7A. This is what I would do if I were highlighting that information. Like, it's crazy. This kid's like 22 years old. He has no clue. He's just hyping the shit. He's just making money, And I'm like, okay, well, let's look at the law. Fuck it, let's look at the law. Why not? It said that there. Everything you're saying is hinging upon this law. Why don't we look at it? Why not? Why don't we read the rest of it? Why the fuck not? Well, again, if you're biased, you're not interested in the full picture, then don't read the rest of it. Don't look at the law. Just trust this guy. Foolish. Okay, 522B 7A. Okay. B. But it's lowercase b, isn't it? Yeah, lowercase b. A. It's probably way down here then. There's got to be a table of contents here with this. The outline. Where is it? That's probably why he didn't look it up, right? Alright, we find lowercase b. Now we're past it. There it is. Is that it? Alright, I'm going to see if I can get directly to it. No. Yep, research is not necessarily, you know, that sexy and exciting, but it is what it is. 552A. That B got me last time. B, the section does not apply to matters that are, okay. B, 7A, okay, 7, records or information compiled, does not apply. This section does not apply. Not apply to matters that are records or information compiled for law enforcement purposes. Okay, so they're saying that the freedom of information does not apply to records that are compiled for law enforcement purposes, but only to the extent that the production of such law enforcement records or information. Okay, here we go into 7A. Could reasonably be expected to interfere with enforcement proceedings. So they basically just quoted it here. There's really not anything else in the law here that is really relevant. It could reasonably be expected to interfere with enforcement proceedings. Could be expected. So, you know, the way to look at that would be, okay, if there were an investigation happening, releasing the data would potentially screw it up. Right? So there's just some stuff that they're never going to give you unless there actually is, unless it becomes a matter of you know, court, public record, and a proceedings, it says down here. So, again, this is a 22-year-old kid who has no clue. I mean, it's really embarrassing, the lack of critical thinking skills. I mean, I'm not a lawyer. I'm not a securities lawyer. You know, I'm just a guy that I went to college 20 years ago. But, you know, I know how to read, and I know how to put together what I'm reading and think about it. And I know what these words mean, and, you know, it's not really that hard, but you just you can't rush through it. You have to, like, okay, where's the right B? I gotta make sure I'm on the right one. Like, you have to pay attention. I mean, it's just garbage. I mean, this guy, same quality, lack of quality, same bullshit, over a year. So they will never release this, whether there's an investigation or not, unless there were an investigation and like it went to court, or there was some kind of like enforcement action by the SEC. But it's very clear here that you know, it should not be construed as an indication by the commission. You know, and you could say, well, of course they're going to say that because, you know, they don't want you to think that it is. No, that they're saying that they would never. You know, any investigations are conducted in a non-public basis, so they're not going to tell you whether they're investigating it or not. And if they were, they wouldn't give you the information. If they're not going to give you information. So,
spread out to the public, it could
big old nothing burger here
impact this investigation going forward, and the parties that are responsible may not be held liable. Now, it is the general policy of the commission to conduct its investigations on a non-public basis.
Look at this.
Thus, subject to the provisions of Freedom of Information Act.
He's going to go with
the Freedom of Information Act. The commission does not disclose the existence or non-existence of an investigation or information gathered unless a matter of public record in proceedings brought before the commission or in the courts. So they're not basically admitting or denying that there's an investigation, but they're also not giving any investigation under a statute that says they're not going to disclose things if there's an active investigation. Sounds a little bit strange here. And then continuing along, accordingly, the assertion of this exemption should not be
they wouldn't give you the information even if they weren't doing an investigation.
Any violations of the law occurred with respect to any person, entity, or security. That's up for debate. Please
see, See what I mean? That's up for debate.
Be advised that we have considered the foreseeable harm standard in preparing this response.
Stupid.
This is probably the first time that we've really seen the SEC comment specifically about AMC. We saw their GameStop report, but this really looks like there is a pretty active investigation going on.
No, it doesn't.
So we're going to see if we can get any more responses from this. But this is very interesting, and I wanted to make sure that this was shared with everybody.
Interesting.
Now, let's talk a little bit about the potential for a gamma squeeze going
one piece of bullshit to the
next.
next.
When we come over to Stonko Tracker over here, let me refresh this as well, just so we have some data.
We gotta refresh it, make sure it's fresh.
For this week, there is a little bit of a tilt with calls in the money and puts in the money. There are more calls in the money for this week than there are puts. There's a lot of calls out of the money right now, and we're going to look at the option chain too. There's a lot of volume on this chain right now. But what I really want to look towards is this June 17th monthly options expiration period, where we still have a boatload of puts.
Oh, there it is, a boatload. A boatload.
Money, 108,000. And 222,000 calls out of the money. If we can continue to stair-step our way up, yes, we are definitely in for some form of a quote-unquote gamma squeeze, where these market makers are going to have to go out in the open market.
Dude, like, the same like, bullshit explanation for a year. For a year.
Unhedge the puts as they run out of the money by buying shares to close out those short-term short positions that they were using in order to hedge the puts that they were selling. And then the hedging of the calls that are running in the money, where they have to go out in the open market and buy those shares to hedge the calls that they are selling. Now, taking a specific look at the options chain for this week, when we come over here, this is GME. Let me just switch this back to AMC really quickly. When we're taking a look at AMC's option chain for this week, there is a lot of volume occurring at these strikes that are pretty close to the money here. We have 69,000 in volume at this $13 strike. We have 43,000 in volume traded today, which is basically just means contracts trading hands, total purchases and sales at this $12.50 strike. If we start moving our way up through 13.50, we could definitely see a little bit of bullish action in terms of market maker hedging. But again, we are going to have to wait and see if that happens going into the end of this week. Tomorrow, the last trading day of the week. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis,
that was painful. That was painful for the common sense, and that was my contribution. Holy shit! All right. So next we have from Manny, Teddy Zane, Doge Warrior. That is what this is, right? Oh, I gotta make sure to turn it down. Shit. He's got a loud-ass intro. All right. Before I do that, I think, so, okay, good. Nope, yeah, we're good here. Okay, so, Teddy Zane. I have that almost all the way down, and it appears as...
buddy, what's up?
Looks like it was really loud, too. Oh, you know what?
Here's what's up. Late afternoon video, because I am puzzled on this one. I'm still in AMC. Look at old Bernie. Check this out. Bernie's going nuts. What you doing, Bernie? Bernie's trying to climb out of the freaking cage. Look at you, boy. Bernie's trying to get out of the aquarium. What a freak. Look at them legs.
And high-speed internet. That's all I gotta say. For me.
Dude's got, like, how many claws? Freaking 8 or some shit. That's my lobster. That is Bernie the lobster, y'all. For those of you that are just now tuning in.
I had my mixer window up in front of the video. I couldn't see it
right there,
for a second. And
studio pet.
I thought he was talking about, like,
look at everything that's going on with a lobster. Look at all that shit. They are so alien. All right, let's get to this, man. I'm puzzled. Here's why I'm puzzled. Because this, to me, seems AMC, GME's kicking it. GME's rocking, holy shit. And AMC's following. But it appears to me as though this is like...
forever the follower.
The people's rally. I don't see anything behind it. I am confused because it didn't reach the number I needed it to reach. Sorry, stop bothering me. It didn't reach the high. I needed to see high 12s. Almost tapped the 13.
I'm confident
I know
that
markets
he can
closed on Monday.
He can get to this.
Friday.
He can get this.
You know, Friday we push it up into mid 13, high 13. Then we can margin call next week, and we can start pushing this thing up for a real reason, like catalysts.
You weren't pushing
real catalysts. Right now, I'm not seeing anything. That now we sunk into dangerous territory, because now the hedge funds, the market makers, can manipulate us back down.
Okay.
She didn't go into the ultimate green territory, the safe zone. It didn't hit it tapped into the 12. What was it? 1260, I think. We needed to see 1290, 13. That would have been the safe territory that we could, kind of remain.
He was talking about. He's talking about games. He's talking about AMC. Okay.
In hovering for tomorrow, push it up even higher. This is nothing more than what I'm calling some people's FOMO rally, maybe, which is not enough reason.
You can do it
now to push it. So I'm puzzled. So usually I have a really good, solid gut feeling about where we're going to go the next day. All I can say is I'm still in because I'm super high in the green. I'm really nervous about what's about to happen. So tomorrow I'm going to be glued,
sold and bought back in
phone, and possibly ready to make a move. So I have no answers on this one other than this is really dangerous territory for AMC to be in.
There you go.
This really to me is nothing more than a people's rally. We all got excited.
What does that mean?
We all came back in, but I don't know if it was enough. All right,
I think I understand what he's saying,
because they have so much power. You guys already know now, like all these little short ladder attacks to get it back down under 1050. Now they'll try to plummet this thing into the nines, high nines. So that's my take. This wasn't enough. This was not enough for us to guarantee that we were going to push even higher tomorrow, and then margin call Tuesday, Wednesday, Thursday, and holy shit, now we're into the $30, $40, $50
What is this
urgency?
on
I did my video at $70.
Waiting over a year.
Banking on that to happen. So as of right now, we're at a standstill with these motherfuckers. That's the bottom line. That's what this is. This is a tug of war, and we just met in the middle. So who the hell is going to win this shit tomorrow?
I wonder if you saw my tug of war video.
Pre-market, of course, I'm going to be paying really close attention to pre-market to see what kind of games are played. But when the gate opens, that first 15, 20 minutes is going to speak loudly. They might right out of the gate start pushing this thing down super hard just to scare all that new money out. Because a lot of you new kids that come in are going to be like, hey, my buddy told me to do this, but what the hell?
Sue him for giving fake financial advice.
Freaking squeezing, I'm out. Nervous money. Nervous money is going to be out first thing in the morning, which there's a lot of new nervous money. Okay? All right, y'all. Till tomorrow.
Well, it would be better if people could.
Shaboom!
It'd be better if. What is all this at the end? Weird. Okay, just. So no, he didn't. He did not identify that properly. We've got a fake pump, and we've got people's rally, and I mean people's rally is better than fake pump. I think the term that would probably come closer in that sense would be fool's rally, right? Or sucker's rally. That would consists of short covering, essentially. So it's you got to say, okay, why why would you have one without the other, essentially? And it just makes sense. Okay. All right, next we have, from Antoinette, good old Frankie Muhammad. Look, man, we got Frankie Muhammad here, talking about they want our diamonds.
Hey, this is Frank.
They want our diamonds. Fake squeeze. Fake shares. I'm sorry. Fake shares. Fake squeeze is another one of those things, though, that comes up over and over and over again.
Hey, this is Frank. Let me say I'm not a financial advisor. Anything that I say in this video is for entertainment purposes only. Whatever I say in this video is my opinion. It may not necessarily be factual. Look, man, I know we've been in this short squeeze play for almost a year and a half, you know, but don't let nobody trick you or don't let nobody fool you or gaslight you into believing that because we've been in this place so long, the devil has had time to prepare to the point to where he's not going to get financially touched seriously in this short squeeze play.
That sounds
and that the
naughty.
only people that's going to be really hurt, you know, from a financial standpoint of view, is the small hedge funds, the little D's. Don't fall for that, man.
Ooh.
You know, I know we've been in.
That is some lewd language there. Little D's, the devil, financially touched. This is a lewd disciple. I mean, we knew that, but I'm just, just highlighting it. It's very apparent in this video.
The little D's. Don't fall for that, man. You know, I know we've been in this play for a long time, but man, in this short squeeze play, we're gonna reach out and touch the devil financially. It's gonna happen. Think about
more
it.
Of that
he would have got touched with GameStop if they would not have done what they did. He'd have got touched with that. You see what I'm saying? If he wasn't going to be able to get touched financially from a serious perspective in this short squeeze play, he would have covered by now. You see what I'm saying? The only way the devil don't receive a certain level of financial devastation in this short squeeze play is that something criminal take place in this short squeeze play to the point to where he's not being forced to cover them synthetic shares that he purchased. That's it. That's the only way. But if the regulators are watching him, you know.
Well, okay. I mean, he didn't purchase them. They sold them. They shorted them, right? And he's saying that, he's not going to have to buy him back. I just don't, okay.
And he's forced to cover the synthetic shares, that he put out there. He's going to get touched financially. So don't let nobody trick you into believing that, because
maybe
this play been going on so long and, he's been investing in different things throughout crypto and the stock market. He's prepared. He's insulated. He's not going to get touched. He's going to get touched in this short squeeze play. Unless something criminal happen, and stock market manipulation take place that prevents him from being touched. Now, let me say this, man.
Wow.
We put the devil and the 1%ers in a position that they not used to being in. See, normally, in my opinion, when they want something and they can't get it, but they need it and they can't get it, see, they figure out a way to either steal it, my opinion,
touch someone,
or take it. That's just how I feel. But see, they haven't been in the position to do that. See, we're not allowing them to steal our diamonds, our AMC shares.
How is
you know why? Because see, we don't fear them, and see, we diamond handed. So they haven't been able to get our diamonds away from us.
It's been a long ass time.
They haven't been able to take.
It has been a long time since I've heard somebody use the term diamond hands. Diamond hands. I haven't heard that in a while. I mean, I don't hang out in these corners of the internet, but diamond hands. Next thing you know, he's going to say paper hands.
You see what I'm saying? See, they upset because they in a position that they can't control. And they're normally not in a position like this.
What?
And see, they need our diamonds in order to be able to close out their position. But here's the thing, man. We're not selling our diamonds cheap. See, we sell our diamonds for what we want to sell our diamonds for. And the way I don't sell them. 4 or 5 figures per diamond sounds good to me, based on based on the perspective that I know, man, they made treaties. You see, so they can't fool us, when it comes to this short squeeze play and when it comes to this AMC stock.
This is noise.
We know what we get.
That's
and we know what we got, man, is extremely valuable. And we know billionaires need it, man, in order to get themselves out of the situation that they in. And see, somebody need to tell the devil, because I know he's brilliant. Somebody need to tell him that if retail investors, man, is buying and holding AMC or GME, that's not stock market manipulation. You see what I'm saying? We can buy and hold a security. Ain't that what you're supposed to do?
Well, and by the same token then, you know, market participants can short sell a security. And you have record number of shares on AMC on loan. Record number, supposedly, according to Ortex. Supposedly, hypothetically, allegedly. But, you know, there's this belief. It's been told, you know, I think Lou put it out there. I don't know. I've got to figure out who first came up with the idea of synthetic shares. And it's related to naked shorting. But specifically the term synthetic shares, fake shares, whatever, who started using that first? I want to find the first instance of it being used. You know, because that person is really an asshole. They opened you know, wow.
Buy stock.
Talk about gaslighting.
You hold the stock. You let the stock grow. You be patient, and you get wealth that, you know, by buying and holding this stock and being patient. Ain't that's what Warren Buffett said? Ain't that's what we supposed to do? But see, it's just like AB Investment said. He said it's okay for people to buy and hold a stock unless it's GME or AMC. And I'm like, man, who came up with that? You see what I'm saying? See, man, who came up with that rule? See, man, we're not going to let you
What rule are you talking about? Can you not buy it?
Our AMC shares from us. We're going to continue to diamond hand. We're not selling our shares, man, unless it takes place through a MOAS. It's just that simple. You see what I'm saying? See, they've tried everything in the book.
This dude is not going to take it well.
To get us to sell off.
He is not going to like being touched by the devil.
And they take our shares, and ain't none of it work, and it's not going to work. And here's the thing, man. Just be patient, because they have not been able to be in this play from a legal perspective for a long time. The only reason why they've been able to remain in this short squeeze play is because somebody is helping them. And you can read between the lines. You see what I'm saying? So what we're going to do, man, is continue to diamond hand and hold until they get out of the way and let our play run. Thank you for taking time out to watch the video. Have a nice day.
All right. Like, you know, wow. Okay. I mean, that was interesting. That was really interesting. What do we have next? We have, I don't actually know what channel this is from Antoinette here. By the way, if anybody else has other videos they want to, you know, take a look at, and, you know, we're not going to, obviously, these 20-minute videos, we can't do the whole thing. Well, it's short squeeze channel, though, so maybe we can. These are usually good. Okay. Starting off with good presentation here.
Worried about something else. It seems to be worried about some kind of systemic problem, whether it's a hedge fund blowing up or, God forbid, something bigger than that. So this market's a very nervous market, your call.
Okay.
So you heard the man.
So now we're going to get connecting this to AMC. Clearly, they're worried about the hedge funds that are shorting AMC blowing up. And, you know, we're going to have empirical proof. I'm confident.
Market is worried about something, a systemic issue or a hedge fund blowing up, or God forbid, something worse than that. So those were his words. So these guys, I mean, if you look at the guy, you can tell he's been in this business. He's a lifer. He knows what he's talking about. He knows all the right players. He has a sense. He's a UBS floor trader, I believe, or the head of the floor trading for UBS.
Sounds like the devil to me.
They drop hints here and there. So something's going on. Now, what's going on? If you've been following the channel at all, you have a couple of ideas of what may be happening.
Oh, there it is.
First, here's the quick disclaimer. I'm not a financial advisor. Obviously, this is
juxtapositional implication is what I call this. You know, oh, well, we've been talking about this here at the channel. And here's this other thing. This guy talking about this crazy systemic risk that's somebody's worried about. They must be related. They must be. How could they not be? Because we've been talking about it the whole time, and here's this guy now, and clearly they're related.
This isn't financial advice.
Ugh.
Like the video for the algorithm, turn on your notifications, share it. Let's spread them, going. Make sure to leave a super thanks right over here. Next, keeps the channel going. These videos do take time and effort
that is,
produce for you guys, but
not financial advice. Please give me money. Okay, that's a little bit douchey, or a little bit, for lack of a better word, that's a little douchey. This is not financial advice. Don't take anything as financial advice. Please super thank me with money, please. Okay. These guys are ridiculous. Oh, wow. Look, you can go up to 4K on this one. Clearly, he's getting enough super thanks. He's got good... Well, but he's not even using the video, so... This has a nice graphics card,
but I enjoy doing it.
I can't do that.
For those of you who joined me earlier today on the live stream, my first live stream, I appreciate every single one of you. Thanks for your patience. It was my first time live streaming. I was using OBS, which is an app that you use to live stream. So there was a couple of technical things. I had to figure it out. It was more like a trial thing, because I have had a lot of requests and questions. Am I going to be live
he rambles on about
when the stock starts moving?
Stuff that doesn't
Because
matter.
I have several accounts.
Not hard to see how this video is 20 minutes long.
Shares in different brokerages, etc. But if at all possible, I would love to be online live stream.
Get the propaganda.
And we talked about some interesting stuff. So it was productive. It was a great day. As you can see, we were up close to 15% at 1188, and more importantly, GME was up 30%.
More
at
importantly,
115.17, up $26. So as you guys know, these stocks move in tandem. They were halted in tandem. If one squeezes, the other will squeeze. So nothing to worry about as far as...
Not halted recently, were they? I didn't hear about that.
Asking why did AMC only achieve half of what GME achieved? And there may be answers to that question as well. So we're going to take a look at all of that today. It's going to be a good one, and let's get right into it. So for those of you who know, I made a video regarding Executive Order 14032-13959 a few days ago. Most of you have seen it. It's on the channel. Again, go back. I'll link it in the upper right corner if you missed it. But as you can see, Trump issued Executive Order 13959 right here, November 12th, 2020. And specifically speaking, it's addressing the threat from securities investments that finance communist Chinese military companies. So obviously, they don't want us funding companies that are not out for our best interests and more specifics. And this was actually issued as a national emergency, which is still ongoing. So that's a tidbit that not many people knew. So obviously, it prohibits investment in Chinese military industrial complex companies. There were 31 companies listed originally. 4 were added on December 3rd. 9 were added on January 14th. It went into effect on January 11th, 2021, preventing transactions of these CMICs, or Chinese military industrial complex companies.
Transactions are prohibited.
Now, it was amended or strengthened with Executive Order 13974 on January 13th. It limits divestment up through November 11th of 2021 of those held on January 11th of 2021. And any new companies added require divestment within 365 days, so that there could have been companies added to the list after the executive order, and subsidiaries or companies under some of these companies, right? So it's almost like closing a loophole pretty much. So subsidiaries under some of these CMICs have been identified and included per the 50% rule, and that included other investment vehicles, futures, options, swaps. Swaps was what Bill Huang was playing with. So they try to close as many loopholes as possible. Warrants, ADRs, GDRs, ETFs, MFs, and no, that doesn't mean what we call Kenny G. Okay?
What is
now
it then?
scheduled to take effect 9/30.
If it's not motherfuckers, then what is it?
On 1/28/2021, January 28th, 2020.
For that matter, what are ADRs?
21 with these new amendments. So that was when it was scheduled to take effect. And if you recall, on the 27th, I believe that's when...
This is kind of a clue. It's just a clue. It's reading into it. It's taking context clues here. But if I were talking about this, I would actually say, I would define these acronyms and then say a little bit about what they are, but it doesn't matter. Doesn't matter.
Biden was inaugurated on January 27th. So the U.S. Treasury actually postponed the ban, right? Effective 9:30 in the morning on 1/28. So when this was supposed to take effect, he actually postponed it from that time until May 27th of 2021. And then on the 18th, again of May of that year, they postponed it once again, right? The banning of trading of CMIs until June 11th. So this is the chronology, the timeline of how these things evolve.
Okay, now he's talking about trading these equities, securities, whatever. And these are securities, not necessarily equities. But anyway, now I thought part of this was using it as collateral. I thought that was really the big deal here. Is it ban on trading and using it as collateral? I guess so. But none of this is really a link, except for this 28th and 27th here, January 28th and May 27th of last year, and then June 11th. But these dates don't even really line up. That none of these dates on here were the day of the run up in AMC. So I actually like the way that he's got it all laid out here, because it's very easy to see that these dates don't really jive. They're close. But anyway, if the bans were postponed at that time, that means that they could continue trading it. They could continue using it as collateral. So why would that even cause these events to happen? I don't even know that. So maybe somebody can explain it. But how does that make sense? We need Boss Blunts in here. Maybe we got to go listen. I can't listen to him. It's if it were explained clearly, maybe it would make sense. Okay.
And why am I showing you this? First of all, it'll give you a better idea of what it is, down on paper. And more importantly, it'll give you an idea of how this may possibly play out, including possible changes in variables, amendments. So we'll see how it does play out. And finally, it was strengthened, replaced, or changed again with Executive Order 14032.
I love how they say strengthened, but the damn thing seemingly hasn't really even taken effect. I don't know.
2021.
This shit, they're probably just going to get rid of this.
So it was up until postponed until January 11th.
Clearly
June
they're not
11th,
interested in enforcing
it. And then it was postponed again on
probably just
June 3rd, 2021. Right? It maintained the national emergency status because it is, if you think.
Yeah, China. Hey, China, we've got this. We got a ban on your securities here for your military. Now we're not enforcing it, but hey, if you try some funny stuff, we'll enforce it. That's kind of what it sounds like. Now that I see it all laid out like this, but again, I don't know.
About very dire circumstances. You don't want to be funding the enemy who's, building up weapons in an army to eventually fight us.
The enemy. What? What in the fuck is
he talking?
I'm going to slow it down. I'm going to slow it back down because this is some oh my god. Wrong thing. The enemy. Yeah. My work, we depend on parts that come from China. And, the supply chain is all messed up. Boom in this country comes from China. They're the enemy. Okay. So every company, every corporation is doing business with the enemy.
Again, on June 3rd, 2021, right? It maintained the national emergency status because it is, if you think about it, very dire circumstances.
Okay, before we get to the dire circumstances, it's been postponed twice already. So, again, it's just like this GameStop thing. The pattern is clear, but this time it's going to be different.
You don't want to be funding the enemy who's, building up weapons in an army to eventually fight us. if it were up to them.
That is some
and it adds 59 entities as
bullshit.
of August 2nd, 2021, and it delayed this, again postponed, for this to be effective until June 3rd of this year.
It's been delayed
that's where
3
we stand
times.
right now. So this will pretty much outline everything for you, for those of you curious about the specifics of this, but it shows you top to bottom
I don't
what
even
happened.
see how that's even,
and now
this is even
let's
relevant.
take a look at the price action
why
while
would
looking
that-
at these dates.
Okay, great, awesome,
so we're going to do that now.
Perfect.
And we have dates, and we have the arrows pointing to some of the dates of these executive orders. And if you look over here, January 11th, 2021, it went into effect preventing transactions. And coincidentally, this is when we had a huge spike in volume. From this point to the circle over here was a huge bump. As you can see right over here, it's pretty much flatlining. Now, can we directly correlate that day to this volume bump up? Possibly. But also do keep in mind that this is the day when Ryan Cohen announced that he was joining the board at GME.
Oh, okay.
So it could have been both of those things combined, the executive order and Ryan Cohen.
Or it could be just that. It could be just that. Or it could be, options. Could be retail, the retail investors who, and I mentioned this before too. If you believe in this executive order nonsense, you're saying that it was not retail investors who trapped Melvin Capital, that the apes have taken credit for. They're so happy about that. They bankrupted the teachers and all that stuff. It wasn't actually the apes. They can feel better about not, having destroyed the teachers' pensions, because this is why. This is why. I mean, you can't have it both ways. It was, it was either narrative A or narrative B, or it was, or it's a combination of A and B, in which case it's kind of, how is this going to, if it's A and B, how is this going to be B again? Because you only have, it just doesn't make sense.
Board at GME.
It doesn't make sense.
Now let's go on to January 13th. 31 companies listed, 4 added, 9 added on the 14th of January. And on January 13th, coincidentally, we had another huge run-up.
That's
2 days later
run-up?
After this.
That's not a huge
So
run-up.
is it a coincidence that after January 11th, when this went
counting
into
on
effect,
people not
this is
even
when we had
following
the start
along.
of the run-up, eventually towards
now it's the start of the
crazy
run-up.
run-up in January? Who knows? But here, as you can see, on January 28th, when these things were scheduled to take effect,
oh my God,
the executive order, and all of these companies had to get rid of their Chinese military industrial complex companies. This is when we had the run up north of $400 before the buy button was taken away. So this could have been the MOAS. As we all know, they took away the buy button. They were desperate, and also they pushed it forward. As you can see, on the 27th, the day before, they moved it forward to May 27th. So it wasn't just the buy button being taken away. It was also the federal government getting involved, seeing what was about to happen. And
what the fuck? My God, this is some fucking kindergarten shit, dude.
Again, this is a broken record, but Thomas Peterfy, if you look at my main page on my channel, he says there was almost a systemic crash of the markets due to GME back right here on January 28th. So I doubt it's a coincidence, all of these things that happened and pushing it back, et cetera, et cetera. So part of it is that people were trying to unload these CMICs before the next
it was A and B,
because obviously the price is just going to keep going down. So that made, their margin calls effective, right? To top it off, they had to get rid of these positions. So that's another thing. They weren't able to use it as collateral. So it was a double whammy for the parties involved with these CMICs. Here you can see the delay. Delay number 1. And subsequently, June 3rd, right over here. This is GME's chart, obviously, but this is about when we had AMC's run up to $72. Right at about 5:27, when this thing was supposed to take effect once again. Subsequently, that's when AMC began its run. If you remember.
So here it was this is not start. This is postponement of the ban. So then now they're allowed to use it. They're allowed to trade it again. They're allowed to use it as collateral. So why didn't it shoot back up? That, like, this seems like the opposite of what they're trying to make it seem like here. Postpones ban. Okay. That's they postponed the ban.
I think it was June 1st when it went up to $72.
I'm trying.
The day before I think, is when Aron issued the shares to Mudrick. So again, a couple of things that effectively.
Oh yeah, let's just throw everything. Everything's all related. It's one big conspiracy, obviously. You know,
once again,
two companies, different sectors, different everything. But you know, yeah, Mudrick Capital's in on it too.
To June 11th, and this one, as you can see, the dates are much closer as far as the postponement, the initial postponement. So they probably said we have to do something, and it was probably an emergency injunction type of situation. And they were desperate again because AMC was about to MOAS. So they just pushed it a couple of weeks, right? Gave them a couple of more weeks so there wouldn't be another systemic crash because of AMC now. And as you can see, finally, they came out with Executive Order 14032 again on June 3rd. A week before this was to take effect. And again, it goes until this June 3rd. So this whole
time,
so that's the scenario that we're talking about there.
It's not in effect.
Now, let's talk about June 2nd. And if you join me for the live stream, I touched on it briefly, but here we're going to look at the diagram and we're going to go just a little bit more in depth into it, not too much in depth. It's pretty clear cut. So as you know, 6/2 or June 2nd, GameStop, they have their shareholders meeting where they're going to announce if the vote was indeed passed for the distribution of the stock split in the form.
Well, that's not what the vote was for. That's not what the vote was for. The vote was to authorize up to 1 billion shares. I mean, I don't... Okay.
Of a dividend. Most
Scott,
likely it'll pass, knock on wood.
Stop looking at the
details. And they're guessing that right now it should be 7-1. So this is what we're anticipating. Again, we don't know yet. It could be 3-1, it could be 12-1, it could be 4-1. But our best estimation is that it's going to be 7-1. And that's what this diagram is showing. We have 76 million shares outstanding. If you're wondering, think of this as a container. This is the full potential of the container, which is 300 million shares. Right now they have 76 million shares. And here's a breakdown of who are the shareholders and how many shares there are. 13.2 million insiders, 12.5 million DRS or direct registered, a computer share, 14.5 million funds, 13.8 million institutions, and question mark of the brokers, of the retail investors, how many they hold in the brokerages. This is the question mark. Okay, so how many shares?
I mean, couldn't you just subtract those from the total? Is it really that hard? Like, I guess if you believe that there's more shares than actually exist, but I mean, this is so all over the place. I mean, this really, you have to be brain dead, honestly, not to question this. And why wouldn't you question? I mean, this makes no sense. And he's trying to put it all together. I love it too, because he's trying to put it all together and make it clear. But really, it's, again, this has been the theme lately, last few weeks. These guys are debunking it themselves. They're putting it all together and they think that they're, synthesizing it all and making it very crystal clear. But what they're doing really is that they're just regurgitating the same stuff that we've talked about, that we've, basically debunked at every point along the way when it comes up. They're putting it all together. And of course, none of it makes sense together because it doesn't make sense separately. Here's GameStop. So these numbers don't even match up with what Fidelity says, which is, this is updated as of, May 15th was when all these filings had to be in for first quarter 2022. So I don't know, 13.2 million insiders. Well, the current number is actually 15.7. It's because this all comes from the filings. It's not Fidelity saying this. Fidelity, compiles the data from the SEC based on the filings. Well, it's not going to say DRS. Mutual funds would be like 16 total. They've got 14 institutions, about 16. So institutional's higher than what they're saying it is. And then 60.5%, and then insider is 7.2. This has, 13. Yeah, it's not even the same. Not even close. That one's not even close. And that should be, again, those are all in filings. So they have to disclose when they are issued shares, buy or sell. So now, and it shouldn't be labeled brokers. It should be labeled like retail, or Fidelity calls it other. So retail investors are in this category here. So retail investors, 60%. Let's see, what was the total? It was 76 million. Okay. 76. So that's a 76 million. 60% of that's about 45 million. And they're saying 12.5 DRS. It's kind of not really. Okay, minus 12.5 million. 33.1 million, so let's say 33 million. So question mark million brokers, 33 million. There you go, based on the numbers. I mean, these are all probably off anyway, but that's some basic. I mean, you could put it into an algebraic expression if you wanted to, but it's just, okay, well, we know this. Subtract that, we know this, 60%.
Would this be?
So
now
here's another interesting statistic. So it was 45 million owned by retail, and supposedly 12.5 million are DRS. So that's 27%. 27% of the retail holdings, not of the total float. Total float's lower than that. Total float is going to be 16%. So, but highest number that's ever been DRS'd.
You look at it on paper. Let's do a little bit of math.
Okay.
If you add these up without the retail investors who haven't direct registered and who have their shares in brokerages, that gives us, right? So we'll finally do this final equation.
Finally.
76 minus 54, which should be 22 million. This number should be 22 million on paper. We all know that's not what it is. It's probably 10 times that at least. But anyway,
okay,
this should be
so why would you even bother to use the calculator if you're just going to say that?
Because we know that's not what it's going to be. And that's the genius of this whole situation. First of all, of issuing the stock split in the form of a dividend. The date that it's being done, is it a coincidence that it's a day before the executive order takes effect once again?
Oh my God.
Who knows? Ryan Cohen is a sharp young man, right? We know he purchased, I think, 10% more of GME shares. I think it was last month, which is the cap of what he's allowed to purchase. And ultimately, we want to see a share recall.
Turns out to be
we want
nothing.
These brokerages who are supposed to be holding 22 million shares to issue a recall for all of the shares that were lent out.
No, and that's
so they
also
can
not right.
Accurately and appropriately distribute the dividend, whatever it may be.
That's directly from Al, who thinks that hedge funds trading latency arbitrage, or high frequency traders trading latency arbitrage is front running, and who wants people to take their own lives if you don't believe in this shit, or if you think that if you don't respect Lou, just go ahead and take your own life. I mean, what the hell? But their share recall, that there's really no evidence for that in terms of stock split. share dividend.
Be 7-1, 4-1. They can't do that unless they get their shares back, right?
No.
So that's the beauty of the situation. Another beautiful thing is that these shares
are no actual
the
shares.
Transfer agent for GME happens to be computer share.
There's no physical shares.
So everything's going to be direct, in line, and on the up and up. Meaning these shares, 13.2 for the insiders, 12.5 DRS. Obviously, that's self-explanatory. These shares are already in their system. 14.5 million of these. These should all be clear-cut and direct as far as the dividend distribution. However, this is going to be the question mark, and this is what we're going to keep our eye on. Okay, so most likely they're going to turn this thing around pretty quickly. Once they announce what the vote was, it shouldn't take too long for these events to transpire.
How do you know that?
Okay, so if it is 7-1, that would give us 532 million shares outstanding. Again, this is hypothetical. Again, this is a container. 1 billion is the max potential. But if it's 7-1 out of 76 million, that would be 532 million shares outstanding.
They might actually issue more shares.
Which would be 456 million dividend shares.
They might dilute your
subtract
ass.
This from this. And that would give insiders, their 13.2 million would become 79.2 million. The 12.5 million DRS would now be 75 million. The 14.5 million of the funds would now be 87 million. The 13.8 million the institutions hold would now be 82.8 million, which would be 324 million claimed, which would only be 132 million left, according to the shares outstanding. Again, this was 22. So this is what the number should be, the new number, once it is a 7-1 dividend, if indeed it is 7-1. So we're keeping a close eye on this number, depending on what the dividend distribution is. And again, this is why this date is very important for all of us. Whether you hold GME or not, like I said, these stocks move in tandem. If GME squeezes, these guys are going to be forced to cover their other shorts. They're going to be margin called, right? The banks are going to want their money back, the creditors. Forced buy-ins. So if you look at the price history, you know what I'm talking about. So this is really exciting. We have the executive orders again on June 3rd. We have this June...
This guy is terrible. This is absolutely ridiculous. I had a donut in my mouth.
Shorts.
I couldn't stop it.
Going to be margin called. And distribution is.
All right.
So we're keeping a close eye on this number, depending on what the dividend distribution is. And again, this is why this date is very important for all of us. Whether you hold GME or not, like I said, these stocks move in tandem. If GME squeezes, these guys are going to be forced to cover their other shorts. They're going to be
forced to cover their other shorts.
Margin called, right?
Margin called. Okay. Well, which one is it? Margin called or forced to cover? It's, like...
The banks are going to want their money back, the creditors. Forced buy-ins.
Forced buy-ins.
So if you look at the price...
They're going to get margin called and they're going to be forced to cover. So they'll be forced to cover, and then they'll have to, put up the margin for the positions that they just closed.
History, you know what I'm talking about.
And I hate when they say that kind of shit. If you look at the price, if you know the price history,
money back to creditors. Forced buy-ins. God. So if you look at the price history, you know what I'm talking about. So this is
a straw
really
man
exciting.
argument.
We have the executive orders again on June 3rd. We have this June 2nd announcement whether the stock dividend was...
I'm moving on.
This is fresh news on Bloomberg, May 24th, 2022. Hedge funds brace for $20 billion of redemptions, Citgo says. Only 40% of hedge funds globally made money in the first quarter. 4 out of 10 only made money. And they didn't say how much money they made. This could be 5%. This more than likely means that they didn't lose money like everybody else, like Melvin and like Tiger Global, who's on the verge, just like Melvin, of going. Return gap between top and bottom performers widened. So this is, again, giving...
regardless of what you think about Ken Griffin, all of this denigration of hedge funds and institutional investors by guys like this and the ape community in general, it's really kind of ignorant, because Gabe Plotkin was the manager of that fund. Okay, he made the decisions, I guess, right? So he over leveraged on certain short positions. Okay, yeah. Let's take the value judgment away for a second. Let's take, just look at it. Look at what happened and who's involved, and not try to say, well, that was stupid. It was so irresponsible. I'm not saying that. Okay, that's, you can have an opinion, but the reality is, okay, he was the manager. Whose money was it? Where did the money come from? Where does the money come from that these funds actually invest with? And so when you say, oh yeah, we got to take out all the hedge funds. We got to take down all the hedge funds. Okay, you can take down the hedge fund manager. But it's not his money. Then Ken Griffin said that. He's managing money for other people. He's an investment advisor under the Investment Advisors Act that we looked at earlier, right? So his duty is to put his client's interests above his own. So by definition, it's not his money, and it's not, he doesn't have the same stake in it. Doesn't mean that everybody makes the right decisions. No. And it doesn't mean that, nobody wins 100% of the time. Retail investors know that. We all know that. So, I just think it's really not, it's very short-sighted. It's not thought through very well. And the whole retail investors versus hedge funds narrative is a false narrative. It is absolutely a false narrative. It's been a false narrative the whole time. As is the hedge funds versus your favorite companies. Those are emotional narratives that have been created. I don't know by whom they were created. It kind of doesn't matter because they are in existence. And many retail investors believe these. And they've gotten caught up in this thing. At the end of the day, everybody's trying to make money. Whether you're an individual investor, somebody who's invested with a fund, or whether you're the fund manager, the goal is the same. There really isn't a lot of advantage to, for example, retail bankrupting hedge funds. Like, that doesn't mean necessarily that you are going, like, oh, we took them out, now we're going to get that money. Well, that's not really how if you have positions in something and the price changes and you're on the right side of that change, okay, assuming that you have an open position. But it's just a very kind of ragged, cobbled together, say whatever you have to at the time to kind of justify it. And they said this last summer, this hedge funds versus retail. They're stealing from Trey. They're stealing from you. They stole from you. I mean, that is some emotionally charged nonsense. Emotionally charged nonsense. And all that emotion has really, really, really clouded people's judgment. I mean, it's really, really interesting to me. And one could say it's sad or ignorant or whatever. I mean, those are value judgments. Again, I don't want to make those right now. I'm just looking at what objectively here, it doesn't make sense. Just like it doesn't make sense that hedge funds would want to bankrupt companies that they are trading at a time when entire industries were closed. So the apes had a quote-unquote technical play. They were playing around with these facts here. The hedge funds were shorting these stocks of companies that were closed due to COVID. Well, that's a good trade. The COVID closing trade. Like, the stock's going to go down. You want to make money on that move. Okay, that's fine. It's valid. It's 100% valid. Retail investors, so, you know, wherever this narrative came from, they're trying to bankrupt GameStop. And you guys like GameStop. You know GameStop. You remember GameStop from when you were kids. And remember they did it to Toys R Us. And oh, by the way, they screwed your parents over in 2008. So, you know, let's take them down. It's kind of a bullshit narrative. It's kind of a bullshit thing, really. Well, yeah, Keith Gill made a lot of money, and a few other people made a lot of money, but institutions also made a lot of money. The brokers made a lot of money, payment for order flow, and Citadel, yes, made a lot of money. Not even the hedge fund. I'm not even talking about the hedge fund. I don't really care about the hedge fund. The market maker, the quote-unquote market maker, the internalizer, they made a shitload of money from all these trades. So it's just, you know, it's so all over the place. That's the best I can say right now. This is all over the place, but it's just not very well put together.
Us a taste of what's going on here. And if you recall, Citadel late last year, when AMC was still at a pretty good price, Ken Griffin rather, he changed the redemption rules for Citadel. He made it so that it would take 4 full years for investors who wanted to pull out. If they wanted redemptions, it would take them 4 full years. It would cost them more money. He changed the terms on them, and that's never a good sign, as you know. And this coincided with...
It isn't? Changing the terms is never a good sign. Okay. Right. Got it.
When he took additional funding from Paradigm and Sequoia. And it also coincided when he took his $1 billion back from Gabe Plotkin and Melvin Capital. And it also coincided when he announced he wanted to go public.
So he went and announced that he wants to go public? Okay. Didn't he recently address that in that interview? Talking about going public? I mean, I think he did. And I remember correctly, he said, you know, yeah, but nah, you know, I don't know, maybe. Like, this guy is ridiculous. I mean, this is just, it's like, it's so sloppy and assumptive. And all of these facts that he just listed, and Kid Griffin did this, and he changed the terms on his investors. And he said he wants to go public, and all these things that are probably not even true. All that means, all that stuff taken together, means this. You're going to be so fucking rich.
That's the signs of a man who needs money. And for those of you who didn't know this,
dude,
I know a lot of you knew
Citadel
that,
made a shitload of money.
That he did the same thing as far as Citadel's redemptions structure back in 2008 during the subprime mortgage crisis. And he clearly said that Citadel was on the verge of collapse. So these are all signs, these are all facts, these are all, you know, things that we can use to logically deduce.
Oh my God.
And what's going on.
I got to stop eating. I just have to stop eating. These are all
signs, these are all facts, these are all, you know, things that we can use to logically deduce what the deal is and what's going on.
Yep, you just heard that. These are all things that we can use to logically deduce that you're going to be so fucking rich.
So again, it's an exciting time. There are no guarantees, as you know. There are no dates.
Exciting for grifters.
But you saw the charts earlier
Exciting for the
as
grifters,
far as the
yes.
executive orders and how they coincided with the price action, right, of GME and really of AMC. Because again, even though I don't have AMC's chart up here,
this one is right on it. This one is before it. These are just like random points. I mean, I don't know. I think that this, if anything, what he's displaying here is that this is maybe correlation. These things are correlated. Yes. Yeah, absolutely. Right? They're correlated. They happen at the same hell. they could happen at the same time. Exact same time. Same day. Let's just go with the day, because we don't know when any of this stuff, what time it happened. It doesn't, it had happened on this day. Let's just imagine them all on the same day. Here and here. That still doesn't mean that they're causally linked. I mean, this is the kind of stuff that, and I'm not saying this to be an elitist. I'm not saying this to denigrate anybody or to put anybody down. Certainly not people that are watching this, listening right now. So understand that. I'm saying this in the context of these grifter influencers. But this is the kind of critical thinking skills that you learn. You should learn, throughout your educational career. I mean, most financial advisors, they studied finance. They have, a background in something quantitative. They understand correlation and causation, and they would never, I mean, most of the people I went to college with, and I was not in anything quantitative. If you took any type of, if you were writing, if you were doing any type of research, you're gonna follow, some basic principles, and it's clear that none of these guys have. I mean, this guy, he sounds like a conspiracy theorist. He sounds like a hype man. He sounds like a flim-flammer. And then he has the balls to say that these are all facts that we can use to logically deduce what is happening. I mean, it's really, it's so ridiculous. But I think, I'm sure that people understand what I mean. This is the kind of stuff, these are the kind of mistakes that you make in a class, and, you get called out on it, or you get a terrible grade on the paper, or you fail the exam, and you're supposed to learn from that. Like, this is so amateur. It's amateur. It's amateur hour all day long. So I can't even do the rest of it. What do we got here? Blockchain. Antoinette stepping up with the video submissions here, because Manny is MIA. Move over, John Wick sniping. MIA. Call crime. By the way, call Crime Stopper. I mean, we need it.
All right, kids, here we go.
Oh God.
So, JP Morgan just released.
John Wick sniping is MIA. We haven't had a video from him in 3 days. Manny says it's 24 hours to report somebody missing. So we're just gonna hope and pray, thoughts and prayers, that he's okay. We don't know, but but if you have any information, call Florida Crime Stoppers, so we can account for him. I hope everything's okay.
This morning,
I honestly do.
They're going to be starting to use blockchain for collateral settlements. They call it the latest Wall Street experimental technology, trading of traditional financial assets. Let me tell you what this is.
Let me tell you what this is here now. Let me just tell you something about this.
They're going to couple this in with.
So here's a guy with a Bloomberg. By the way, look, Bloomberg Middle East edition. Welcome, Alex. Right? How to simulate stock. I have to go even sharper on this. Wow. When high-speed internet, it's not gonna work. Oh, wow, I can't even read that. It said it was a video called "How to Simulate Stock Price Changes." It looked like how to simulate stock price change, I think, which is interesting because I've actually looked that up too. Man, me and Al, best buds, I guess. But here's a guy with a Bloomberg article in front of us. A piece of journalism, and then, oh, are we going to read the article? Maybe. But no, he's going to tell us what's going on.
Technology, trading of traditional financial assets. Let me tell you what this is. They're going to couple this in with cryptocurrencies and the likes. And what's essentially going to happen is they're going to use this for transaction settlements, T+1, T+0, potentially. It's part of that settlement process in which Gary Gensler spoke about how we want to go from T+2, T+3, to T+0, right? Close of business. This is incredible things. This is incredible. When you use blockchain-based collateral settlement for derivatives and whatnot, repo trading, as well as securities, these things tell me, right, that we are taking serious steps. I would love it to happen this year, right now, this moment. And I don't know how long it would take to implement something like this if it's already done. But
well, it says right there in the article,
serious steps.
The bank's first such transaction came on May 20th, when two of its entities transferred the token representation of BlackRock Incorporated money market fund shares as collateral on its private blockchain. The effort will allow investors to pledge a wider range of assets as collateral and then use them outside of market operating hours. Yay, this sounds so exciting.
I would love it to happen this year, right now, this moment. And I don't know how long it would take to implement something like this if it's already done. But these decentralized platforms like crypto and whatnot are being used in a way that nobody really saw coming in the past. They're using it to take credit and turn it into debt, but still maintain market liquidity. There's a magical formula there. I don't know exactly how that is done in economic terms. I'll look into it. I'll do another video if needs be. But what it tells me is they have the money. They've created the platform to get the money to us. And all we have to do is cash checks. All right?
What? What? Okay. All right. Oh my God. This is how you're going to get your MOAS money. Through the blockchain. Oh my God. Oh, Jesus Christ. It's such an exciting time. Oh my God.
Money to us. And all we have.
Here we go. I'm going to go back a little bit.
I don't know exactly how that is done in economic terms. I'll look into it. I'll do
we know you don't know.
If needs be.
It's probably like front running.
What it tells me is they have the money. They've created the platform to get the money.
He's talking about the MOAS there. Oh my God.
They have the money. They've created the platform to get the money to us. And all we have to do is cash checks. All right?
Why would there be checks involved?
Such great news.
With a blockchain.
I think this is one of the best things I've heard all week, maybe all year.
Oh my God.
The fact that they can tie the debt into a crypto coin, into a stable coin, get us our money, and it's just written off as debt. And, they obviously, the value is.
Over time, JP Morgan's blockchain could potentially be a bridge that connects institutional investors with decentralized finance platforms in the crypto economy. As the crypto sector grows over time, quote, there will be a growing set of financial activities that will happen on the public blockchain, so we want to make sure that we are able to not only support that, but also be ready to provide related services. Since late 2020, the bank has used blockchain to conduct intraday repurchase or repo, a type of short-term borrowing and fixed income. To date, more than 300 billion of repo transactions have been processed on the network, which counts Goldman Sachs Group and BNY Paribas SA among its participants. For years, Wall Street institutions have been exploring the use of blockchain in their businesses, such as interbank payments, mortgage loans, cross-border trades, and paying the apes for the MOAS. Vanguard and State Street Corp have traded foreign exchange forward contracts using blockchain technology to reduce counterparty risks. Goldman and BlackRock are also working on the tokenization of a range of traditional asset classes. So that's something that actually already exists in other parts of the world, Europe and such. So you can trade an AMC token that is tokenized stock, and I looked at that last year, but this doesn't. Yeah, but really, what it is, it's they have the money. They're building this to get you your money. All you have to do is cash
the value of the coin itself, but Morgan itself is the one backing it, along with the United States. I would imagine if it's a U.S. token, U.S. based coin, with the United States dollar as its backing.
Wait, is he saying that the
we're talking about
is going to be paid out in crypto?
Money that's going to be valued at, and I don't know what this means for the rest of the market, because I don't know who else is going to be doing this. But the fact that you're tokenizing equities, fixed income, and other assets tells me that nobody's not going to get paid. But it also has a greater implication on the value of the dollar and how powerful it really is. I'm starting to suspect that when you take a piece of pie, or if you look at the dollar as a pie, like a big pie, or big cherry pie, if you will, right? It not only will feed the rich, the poor, the middle class, everybody, but it can also feed the future when people get hungry in the future, which is essentially guys like us who are going to be taking the big a big chunk of this money that's coming in based off the US dollar. It's remarkable because there's a pleasing circularity, because as that money gets spent, brought back into the economy. This guy is so full of
shit. Oh my God.
And it's really a proponency for trickle down economics.
It's a proponency
here in the United States. It eventually goes back into the
system. This guy is an extreme bullshitter.
The economy itself.
You can't bullshit
on the US
a bullshitter.
Dollar. It's actually fucking brilliant.
And he's,
I'm just flabbergasted that they actually came out with
You were in
the
presence of a bullshitter.
We weren't going to see it anytime soon, but they're doing it.
The good kind.
And of course,
the good
our
bullshitter
friend
of the
New York,
East.
Blue versus Wall Street, El Maja, I think that's the way to say it. The magician said it months ago. Last year, I think he said it. Hey, they're going to find a way to do this using tokenized securities. He said it a bunch of times. Nobody believed him.
Nothing here proves that. And it said down here that they've been doing it. They've been using it for repos. Oh, I mean, I don't know.
There it is, black and white, released, and Morgan's the one doing it.
Like, this is not proof of anything.
Simply incredible. Well,
simply amazing.
Mr. Magician,
wow, that was
congratulations
quick.
to you for being right again.
Wow.
It's
Alan
remarkable.
Liu sitting
really
in a tree.
And
KISSING.
It should give you guys hope as well. I'll see you guys real soon.
They are, as Biden would say, butt buddies. Joe Biden would say. Let's see. We still got them coming. I think this one was the next one here was submitted by Lynn. So this is going to be good, I'm sure. Probably kind of nutty. We need some comic relief after that. After the last few.
We have a new tweet from the SEC. They said today we charge broker dealer.
I didn't know who it was. Wait a minute. It says buy the dips, but I know that voice. Who is it?
Trade Zero America. We have a new tweet from the SEC. They said today we charge broker dealer Trade Zero America and its co-founder Danielle Pipitone.
Danielle Pipitone. Okay, I'm glad that we have this one here because I haven't addressed this yet. But
please stating to the firm's customers
2-minute spiel
that they didn't restrict the customers' purchases of meme stocks when in fact they did. And the SEC released an entire report on this. But user of intellect said this: Gary Gensler and the SEC, whose sole purpose is to protect retail, is literally mocking us and plainly saying,
well, no, that's not what it says. It says sole purpose is to protect retails is literary mocking us and plainly saying
it will cost $125K.
Wow.
If any broker holds trading...
Yeah, it's a user of intellect right there. That is a person with a PhD.
of retail's favorites, GameStop.
Oh, it's autocorrect.
So what user intellect is saying is that the SEC ended up charging broker-dealer Trade Zero and the co-founder Daniel Pipitone around $125K or some odd number like that, which maybe to you and I is a lot of money, definitely. But for a brokerage like this that probably transacts and makes millions upon millions or even billions of dollars per year, it
sounds like his mom is asleep
it's
in
like
the next
the equivalent
room.
of you or I giving away 2 cents and having something to feel for it. So at the same time, when the SEC charges them, they're basically saying that they're getting a slap on the wrist, pretty much like what the SEC does with a lot of these hedge funds and a lot of these insider dealers, etc., etc. We will bring you down and throw you in dustbin of the history, you crony clown, AMC GME.
Okay, I mean, this one is so, you know, it's just, you know, I need a, like, give me a challenge, guys. Seriously, give me a challenge. Okay. SEC says, today we charge broker-dealer Trade Zero America and its founder, Danielle Pipitone, with falsely stating to the firm's customers that they didn't restrict the customers' purchases of meme stocks, when in fact they did. But the abuser of intellect is saying the SEC's purpose is to protect retail. And they fined this broker-dealer, saying it will cost them $125,000 if any broker halts trading of retail favorites, which is not why they received a fine. No other broker-dealer received a fine because that's not a finable offense. It's not illegal. It was in the terms of service. But more importantly here, the reason they got fined was because they lied to the customers. They falsely stated that they didn't restrict the purchase of these stocks, but they actually did. That's why they got fined, not because they halted trading. Halted trading. No, that is, I mean, I don't know. Like, again, people read. They read the headlines. They read the first paragraph. They read the, you know. Apparently, they skipped the part that says falsely stating that they didn't restrict, when in fact they did. Like, that's half of the whole statement. But you know, this is so sloppy. Like, no, I'm sorry, but if you have a PhD, it's from like Bryant and Stratton or something. You know, Strip Mall College. They don't have PhDs, but you know, this, no, like, come on, nobody would be this shilly. Maybe they would. I don't know. There's all kinds of people out there, but in any case, they put that right at the beginning of their Twitter bio. Like, yeah, you know what? Trust me. I have a PhD. I'm a professional. I'm a data analyst. Yeah, okay. That's like Andrew No Money's data scientist. Yeah, well, you could have fooled me, because, you know, none of your work actually indicates that you know shit about this stuff, or that you could even pay attention to details. And this is not quantitative at all. This is just, you know, a statement, like a, you know, reading comprehension. They'd fail it. They'd fail that test. And then Benji here, or I'm sorry, Buy the Dips, but it's Benji, hyping this up. Jeez.
Now I'll just say, let's say the SEC charges them with some crazy number like 500 million or $1 billion fine, or maybe made them shut down their entire brokerage for doing such a thing as lying to customers, which stated to the customers that they didn't restrict the purchases of these meme stocks when they definitely did. Maybe that would change things, but these small fines, these small fees, do literally nothing against the criminals.
Well, you can't say that because they haven't done it again yet. It does nothing? Okay, good. Opinion. That's an opinion. Duly noted, but video from Lynn. here, coming up here. I don't know how many channels he has. At least 2. Benji.
What's up, guys? So I have another comment.
Okay, let's all right, we're having quality issues of the videos.
What's up, guys? So I have another comment from a subscriber. So let's go ahead and check it out. Okay, here's the comment. They are not going to allow all these retail investors.
Oh, wow. Antoinette, are you here? You're famous. Wow. Did you intentionally pick this one, Lynn? Oh my gosh. This is so meta. I'm getting all kinds of, like, you know, just you know, I'm proud of my my subscribers here. Speaking the truth. All right.
To be comment from a subscriber. So let's go ahead and check it out. Okay, here's the comment. They are not going to allow all these retail investors to become millionaires or billionaires. So this is what I think. Will they allow all these retailers that are holding till the last dollar
drop,
and a lot of them will become millionaires and billionaires? I think they may stop it before it gets to a certain point. I think it's going to still be controlled up until a certain price, and they're going to do what they always do, and they're going to do it because no one higher up is going to step in and enforce like the rules or the law. No one's going to step in.
What law, what rules is that? The one that says that big money can't, you know, trade. I don't know. What exactly is the violation here? I never understood that, but it's okay. I don't have to.
Higher up is going to step in and enforce like the rules or the law. No one's going to step in. They haven't stepped in now. They haven't stepped in since the stock market opened up, and they're not going to do anything about it. I don't care if 1,000 of us go sign a petition and go put it on someone's desk. They're not going to do anything about it. Like I said, once this whole mess gets on the mainstream news and it's reported daily, all the time, like all the other news that we've been going through, then it will get the attention of everybody. Then some things may slightly change, but right now it's like they know a lot of people don't invest. They know there's not a lot of people that look at the stock market like that every day. A lot of people just get up and go to work. They invest in their 401ks and they watch it go up and down, and that's it. They don't know anything else about it. So
and a lot of those people then became apes, unfortunately, and they still don't know anything about it, which is sad. But it's a reality, you know. Most people who come in the market end up leaving. They're trying to trade, you know, day trade or trade actively, and you know it does take a lot of attention and time and frustration and failure, as with anything that's rewarding, right? So, I don't know. Chris Norland talked about this kind of in a video recently that I watched of his, but. You know, the media, you got to just forget about the mainstream media. I mean, that if you think that they're going to save you, you know, I don't know what to say. It's just the mainstream media is another major, you know, for-profit entity, as are the stock exchanges and then the market makers and broker dealers and all those people. That's the system we have. So if if you think Wall Street is scumbags, then the media is kind of like, you know, not that far off. Now, it wasn't always this way. It could change, but you know, it's just it's big money, and when they start making that money, you know, it rarely, people don't give up that. People don't give that up, you know. In fact, that things get more and more conglomerated and concentrated and consolidated, which allows the flywheel to spin even faster. So the media will not save you. R.I.P. Edward Murrow.
I mean, the reality of it is there's a very small percentage of people that actually pay attention to the stock market.
I mean, he's not wrong about this,
A large percentage of the people, they don't. They just don't. Some are investing. Some let someone else invest for them, and then they don't even look back. So there
Those
may be
people are
a lot of
happier
people that
and
will
healthier,
become wealthy.
probably,
They
than the rest
just
of us.
have to make sure that they bought enough shares to where,
But it
even
sounds
if you
like
get
he's
to
assuming that,
I don't want to say a high amount, but let's say a mid-range.
and people are thinking there, people that only have like 12 shares, they're like, oh shit, well, maybe I need to buy more. That's the problem I have with this. It's misleading.
Range amount maybe like $300 or $400. If you have enough in there to become a millionaire, have no shares, and it reaches $300 and you become a millionaire or a billionaire, whatever, then you're going to be doing good. If you only have a few shares and you have to wait till it gets to, you know, 10,000, 5,000,
1 million. Manny and I are going to become millionaires.
A millionaire, then
one share.
You may not even make it. So that's why I say
a lot of people
most likely going to be controlled.
Anything.
And a lot of people are not going to become wealthy because a lot of people are going to be selling. Like, there's some people are lucky, they're going to be happy just to get $100 per share if they got a lot of shares. Some
$100,
are going to be happy to get $500 per share, you know. And some people are just going to hold, and they're going to cash some out and probably hold a few shares until they feel like it reached the top, and then they're going to sell the rest of those.
By top, you mean
that's some of the strategies that people doing. But yeah, as far as millionaires, I don't think there's going to be a lot, but there's going to be some. All right, see you in the next one.
How many people made out well on the GameStop run up, or the first AMC? I mean, you know, the reality is, if most people, you know, they're not, they have these unrealistic expectations, so they're going to hold in the, you know, in the hypothetical situation of a massive short squeeze. Okay, that's assumed. That's what I'm talking about. But I better clarify. Scott said it's going to happen. They're going to watch it go up and up and up and up and up and up and up. And then, you know, they would see it coming down and be like, oh, no, this is just, you know, nothing ever goes straight up. So it's just going to pull back and then shoot back up. And then it's not going to do that. Like, just like on GameStop here, every time when these, you know, these little fake pumps here, I mean, we could go to the option chain, I'm sure, on around all these periods here, and probably right now too, and probably see elevated option volume. And, you know, I don't know, we can go look. I have it right here. So we can look and see. But I mean, all right, GameStop. Well, let's just look at the overall. So, I mean, only 420,669, 420,69. You can't make this shit up. Clearly, I was wrong. There will be a MOAS. Holy shit. Now, okay. It may be a little different now because I think, you know, a lot of retail is tapped out. You know, retail is definitely tapped out to a certain varying degrees, but certainly a lot are. Let's see here. Okay, for this weekly, the weeklies here, this Friday, tomorrow expiration. I mean, yeah, there's a decent amount there. I could go back in time and look. Let's see, we could probably see it spike, but it's a little bit laggy, buggy, so I won't do that. But, you know, that type of talk, it really, you know, it's like peer pressure or something. I don't know. I mean, and ultimately, adults are responsible for the decisions they make. But, awakening for a lot of people, I think. And we've said that for a long time. The AMC pumpers like to talk about prepare for the
kids,
squeeze.
it's Al from Boston. How you doing?
Wow, an Al from Boston twofer. You know, a lot of people, you know, have not really experienced a lot of this stuff before, or any of it in terms of being involved in the market. So they're relying on what people tell them, and a lot of what they're being told is just nonsense. But, you know, some millionaires, but the thing is, you know, I mean, anybody who's been successful in the stock market is going to tell you that you're not going to make, some millionaires, some people, you know, yeah, they have a trade that's like just out of this world, that they never, you know, they had the idea, obviously they put the trade on, but, you know, it went really well in their favor, you know, or whatever, and they, you know, really, maybe not $1 million, but, you know, they made a lot of money. Okay. But by and large, people, you know, the idea is to try to be consistent, make consistent profit, not a ton every time, but because you won't make a ton every time, you won't make a profit every time. So let's say, you know, 6 out of 10 trades are successful. That's good. That is a very good average. So knowing that, okay, that's maybe attainable with a lot of work and trial and error and learning from your mistakes and listening to other people and, you know, learning from other people, but, you know, not adopting bias and, you know, whatever else, being objective, being a contrarian. If you know that, okay, anywhere from 4 to 6 of my trades on average are successful, then, you know, that's a consistent win rate. That's good. That's what you want. You don't want outliers, like one outlier. And that's, unfortunately, I think that's a lot of what's happening now. A lot of people got lucky last year, and they're trying maybe to replicate that, or other people are trying to replicate the lucky, quote-unquote, lucky break that other people had last year. Meanwhile, everything's different now. Everything's different in terms of the economy and where we are in terms of macroeconomics, inflation, interest rates, world affairs, conflicts, politically, you know, everything. Not to mention, no stimmy, no unemployment.
All right, kids, it's Al from Boston. How you doing?
All right, kids.
Long story short, today the market was somewhat okay. I mean, it wasn't anything to write home to mom about. Let's take a look. It was green, but you know how I feel about this thing. In about 2 weeks, when the interest rates are released, it's going to come crashing down again, and well, it is what it is. Okay, that being said, no big deal. Let me tell you what's going on with us, the little channel here.
Like, look at how he plays that off. That's
wasn't anything to write home to mom about. Let's take a look. It was
he's such an
kids. It's
asshole.
Alvin Boston. How you doing? Long story short, today the market was somewhat okay. I mean, it wasn't anything to write home to mom about. Let's take a look. It was
wow. It wasn't anything to write home to mom about, really. Okay. I mean, he's talking about today, I think. This video came out today. I mean, is that... I don't, you know... How do you... yeah, no, that's today. So that's, you know, well, maybe you won't write home to mom about that, but, pretty substantial move, especially if you're trading options. So, yeah, I don't know. What a weirdo.
It was green, but you know how I feel about this thing. In about 2 weeks when the interest rates are released, it's going to come crashing down again, and well, it is what it is. Okay, that being said, no big deal. Let me tell you what's going on with us, the little channel here. So I've been partnering with some folks over at the the Idea Exchange, and we're going to be producing a simulation of what it will look like with multiple variables of the squeeze. In other words, let's say Adam Aarons's, Dr. Strange comment was an indication that we're 4 times over the float. So it's like 2.5 billion shares.
I didn't know you could simulate conspiracy theories or misinformation. We're going to simulate ignorance here. Okay.
5 billion shares, double that. Then we have 10 billion shares and 20 billion shares and so on and so forth. We're going to run a simulation, right? And we're going to see what would happen if we had like 20, 30% of the AMC community, retail community, leave at like $500, $1,000, $10,000, and how potentially high it could go based on the amount of annual, it's called AUM, annualized, it's called annual assets under management, AUM. It's been a long day.
What?
Assets under management. We're going to use that as a how do I explain it? Like a time stop, if you will, like a timer. So if they have $100 million in assets under management, and they have a couple billion dollars in their savings, we're going to use that as a timer. How long they'll stay afloat for in terms of a short squeeze? How much can they?
Good luck with that. Okay, like you can't do that. You cannot simulate that. You can't simulate what the price would be. Why? Because it depends on where people are willing to buy and sell the stock. You cannot. So if you create a order book, you're going to have to put in orders at certain price levels. And it would be arbitrary if I did it, if any person did it, because everybody who's buying or selling, everybody who's selling bought at some price and they want to sell at some other price. Everybody who's, buying wants to buy at, this price or lower. You can't simulate that. How are you going to simulate that? It doesn't matter how many shares there are if you don't know what people are willing to buy or sell at. It's literally the point. So you can have low volume and have a big move because the market participants that were there, that showed up that day, only wanted to get this price or that price. So, this is just smoke and mirrors nonsense. Let's get people hyped about the squeeze, and we'll even let them simulate it. I mean, good Lord.
They spend in a day, and so on and so forth. So what we're going to do is calculate this, and we're going to run multiple probabilities, right? We're going to see this. How many ways can this happen? How many ways can, these guys stay away, stay alive through something called a Monte Carlo simulation. And you can Google that. It'll give you an indication of how it is that I'm going to be doing this. But it's really fascinating stuff. We're running probability. We're running all the different ways we're doing it, and basically give us an idea if every word to paper hand, which is not exactly
paper hand. I did hear paper hand today. So we heard diamond hand from Frankie, and we heard paper hand from Al or Alex.
Discuss, but it is a realistic possibility, and everybody's talking about it, and how high can it go? How high can it not go? 1,000, 10,000, 20,000, 50,000, 100. Nobody knows. Nobody freaking knows. So what we're going to do is we're going to run it simulation wise. It's a visual simulation. It's a business game. And we're going to get an idea of how high it could potentially run to if these guys start running out of money. Remember, they need to pay margin requirements. A margin call is only good if there's a liquidation, right? So if that doesn't happen, what is it? I mean, what does it mean? What good is it? Now, I'm a fervent believer in this, that a short squeeze is only possible if and only if there's only two participants, the retail investment group and obviously the investors in general, we'll call the institutions as well, and Citadel, the market maker. When there's no entities,
that's three,
shorting the stock, that means the stock is free to run, right? The only person that can stop us is the market maker that consolidates and comes to the point where, in other words, if the stock is sold so much, they can consolidate and do the bulk sell drops, which will dampen the rise. Of course, it could be a meteoric rise, but the thing is, when these things go parabolic, there's that word again, parabolic. It's really hard to stop. It's very difficult to contend with, especially with using an algorithm. So that's why when we get to those high numbers, the algos are going to be irrelevant because they won't be able to touch us. They would have to reprogram everything right then and there. And that's actually quite difficult. We saw that during the 70 run-up, did we not? So it's like, hey.
I mean, there's just so much nonsense. It's just nonsense after nonsense after nonsense after, just gobbledygook. It's really hard for them to reprogram the algos. Yeah. Okay. What in the fuck is this guy talking about? This guy is so full of shit, dude.
We saw that during the 70 run-up, did we not? So it's like, hey, you're not going to get away with it this time because there's too many eyes on this and there's a bunch of stuff going on. And one good example is the failure to deliver. Today,
here we go with fail to deliver.
Twitter, I released a document that was forwarded over to me from another retail investor, and basically said, this is a letter from an SEC official that said.
And we already saw this. We saw Short the VIX talk about this. We went through the whole thing. I wonder if this guy has critical thinking skills.
We're not going to be able to give you your FOIA request for the FTDs of AMC because there's an ongoing investigation.
That is 100% not what it says. Look at that. I mean, we went through Short the VIX's explanation of it, and he butchers it. Don't get me wrong. But then he kind of pulls back and says, well, it doesn't say that, but that sounds familiar. Alex here, he just literally rephrased it, incorrectly. Like that's wrong. That's not what it says at all. It's not what it says. And if he read it and he couldn't pull that out of it, that says one thing. If he did, and he's just kind of misrepresenting it, hyping it here, because there's an ongoing investigation. Much worse. That's crossing over into fraud. And I think that, well, I don't know. I don't know because I just go back and forth in my head. And it seems like Chris Norland does too. He's like, they're either misleading, I forget exactly what he said, but, the idea that they're either negligent in doing their research, or inept, not able to, lack the critical thinking skills, rush through it, whatever. Or they know what it really says, but he also knows, hey, it'd be better for YouTube if I say it's because of an ongoing investigation. And if you didn't read it yourself, you wouldn't know. Now, I read it. We read it. We know. So, you cannot bullshit a bullshitter. Not one this good. But you can bullshit and fool the uninformed retail investors, known as the apes, because they don't. They don't look at things. They don't read them. They trust when they should not trust. They trust without verifying. And that's a recipe for disaster, my friends.
That ought to tell you enough. That ought to tell you enough what's going on. This thing is balls deep. They have the money to pay us. We just don't know how high they're willing to go with this thing and what they're willing to spend to get rid of us. But no matter what happens, we're going to squeeze. We're going to make money.
Okay, that's an interesting point. I bet that somebody out there is willing to pay a lot to get rid of you motherfuckers. And by you motherfuckers, I mean the goddamn influencers. I would put $1,000 in to get rid of you guys. I don't know how that would happen. Legally, in a nice way, without some Sopranos style stuff. But I mean, you guys need to go away. You guys need to go away. I mean, the damage has been done. Damage has been done. So here we have, an example of, Short the VIX talked about this, and he got it wrong and made the assumptions. We looked at it and said what it actually was saying. Now we have another guy. He's not even showing it to you. You can't even read it. If you watched this video and you didn't hear anything else about it, there's no links. There's no facts. There's no references. It's just a guy talking. It doesn't show you anything. Shows you the fucking mainstream media again. So this does not help things. It doesn't help things for people now to think, oh wow, they're investigating the FTDs. I better buy some more shares. I better buy some call options because clearly it's going to run in the next week or two. Because they're doing that investigation. Remember? Al said it. Well, yeah, actually, Short the VIX said it too. It's irresponsible. Maybe it, legally not financial advisors, whatever. But these guys need to go away. These guys need to go away. And I don't think Al's going away anytime soon. He only has less than 10,000 subscribers. He quit once. He came back. I mean, and he came back with a vengeance too. I might add. The FUD is real with this one.
All of our dreams come true and all that other shit. Maybe. I don't know. We'll see.
Maybe. I don't know. Right.
Ultimately, you guys, we have to do this Monte Carlo, though. It's very important that we understand what this means, what potential it has, so we can hedge our bets and our losses. Hold on a second. Okay, where is it?
That's
I don't see it here. Where is it? Oh, it doesn't matter. Okay, but back to the Monte Carlo. Basically, what we want to try to do is elicit the probability distribution across a bunch of different channels. We're going to generate a random sample of what's called N values, right? N as in the letter N, November, from the probability distribution of each input. Meaning, okay, we've got a scenario in which, there's XYZ hedge fund. They got $100 million. How long could they last for? And, that sort of thing. We want to see how long these things will take realistically, and then be able to determine how long the actual squeeze will take, and be able to calculate, the depth of the squeeze. In other words,
you can't
if
do
it goes
that.
Parabolic, how long can it stay parabolic?
I mean,
we want to see the uncertainty in the
that'll be
key
meaningless
results
data.
as a probability distribution fitted into what's called a computed Monte Carlo sample. We're using sensitivity analysis an uncertainty analysis to see which sources of uncertainty make a difference to the results and why. All right. So that way we have a robust decision strategy that we can make and succeed for a wide possible area of different futures that we might be able to come to expect. So it's important that we do this. I'm going to have a space call next week, next Wednesday, the 1st at 8 o'clock Eastern Standard Time. At the bottom of this,
we're in daylight time,
video,
bro.
There's a link to that on Twitter.
We are in daylight saving time.
I would advise you to listen to what the results and what we've done. And I'll, obviously, immediately after the fact, we're going to release the actual video presentation of it and basically show you how we did it all. And you can make a decision based on what you see here and based on the data.
Based on
we've already started the data, which was sourced through Fintel. Basically, a list of all the short hedge funds that are involved in this play.
You don't know.
And,
you don't know all the short hedge funds. That's not disclosed. What is he talking about here? I mean, this guy just keeps. He's a clown. He's a total clown. I mean, I don't know if maybe he knows what he's talking about and is just retarded when it comes to meme stocks. But no, I mean, you can't. You don't know who's shorting a stock.
All of us that have kind of. All of them who have been shorting us and all of them that are in the play. So I hope you found value in this. And also, finally, I am going to be reaching out to Patrick Byrne again. Patrick, well, I don't want to tell you guys. I'll let him explain to you what happened after we spoke and whatnot. But a bunch of stuff had happened, and we're going to talk about that. We're going to talk about the economic side of the house, more the economics than anything else. I don't even know if Patrick was willing to discuss what happened, but when he did this video interview
overstock
with me,
shit. Oh, overstock, because
it is what it is.
It's like AMC.
To tell you,
irrelevant company nobody cares about.
But you guys, thank you for the patronage. Thank you for doing all the great things that you've been doing in terms of supplying the group with information that's relevant. I appreciate that. Thank you for that. And I also want to thank you for your patronage. Thank you for being a part of this little mini community of ours. And I appreciate the time and I appreciate everything that you guys do. So thanks again.
Right,
and I'll see you guys real soon. Bye.
Bye. See ya. One more video. This is the last video. Unless we have any other takers. But you can probably tell I'm starting to run.
Richer than I ever been.
Oh my God. I am so sorry. Holy shit. What the fuck?
The richest that I ever been, richer than I ever been. The richest that I ever been. The richest that I ever been, richest that I
Making
ever
easy
been.
money with OBI.
Time to get a bigger Benz.
Excuse me.
Richer than I ever been.
What's going on, YouTube, and what's going on to all you savvy investors out
there? Oh my God, okay.
To the channel where we focus on making easy money on easy plays. And if making money in the stock market isn't your main objective, then I believe you came to the wrong place.
Well, it looks like
before I kick this video off, guys, if I ever helped you.
Okay, so I just finally looked at the title of this video. AMC MOAS is completely false, proven data. AMC stock price prediction. Okay. This is from April 11th. I don't even look at the comments. I don't even want to look at the comments yet. I don't want
to. And if making money.
All right. Got enough volume.
Welcome to the channel where we focus on making easy money on easy plays. And if making money in the stock market isn't your main objective, then I believe you came to the wrong place. And
so now that I think about that, he's talking about the apes there, because making money is not, yeah.
Guys, if I ever helped you in the stock market in any shape, fashion, or
Lynn,
form, can you please leave a thumbs
up? You saw how loud that was, and I turned it down, and then how quiet his voice was, so I had to turn it back up. But if I had it here, this is the same level that the loud music was at the first time. So It's just bad audio mastering. It's okay.
On this video, and make sure you guys get over to my second YouTube channel. It is called Flight Financial, guys. We are getting closer
I need another
to that 2K milestone, and I do make daily videos on this channel, guys. So you want to make sure you get over here and make sure you have all post notifications set selections were on, very good, guys. So you will get a notification when
Thanks to everybody who sent videos.
Video. Now back to the topic at hand, guys.
All right.
AMC sub $17 levels is in store for us this week. But before we talk about that stock, guys, we're going to dive in and take a brief look at SST. Now, SST is seeing nice buying pressure here on today's
What is SST?
trading.
I don't even know what that is.
I did get a small position here at $25.56. Just making.
How about if we just skip past that?
Seeing here, turnover rate is the AMC maybe.
All right, here we go. AMC.
That is AMC, of course. Now, like I was telling you guys, if you have been watching the channel, guys, AMC is headed towards those sub $17 levels. We did break the sub 18, guys, and it's looking as though the AMC may be headed back towards that 1528, guys. And if we do break below that, then we're going to make another low, guys, and that low is going to be lower than the 1290. Now, if we do break below the 1290, guys, prepare for another rinse and repeat cycle to the upside, as you can see here. Going from that 1290 all the way up to.
That's what we said about GameStop earlier. These stocks move together. They move in tandem. We know that. Short Squeeze channel told us that. So, yeah, it's just it's a rinse and repeat type of deal.
34.33. Expect to see that again, guys. We did see AMC move around like that quite some time after hitting
But let's hear the MOAS.
Just like we did here, guys, coming from that $20 all the way up.
I want to see how somebody else does it.
To that $32. We did see it happen again here quite early when AMC dropped to
I'm digging the wrench next to your name.
$30, then ran all the way back up to 52. So, as AMC makes lows, it does make highs, not higher highs, but prepare for AMC to make a reverse here. I'm preparing AMC to actually drop under that 1290 when it's all said and done before the next cycle to the upside. Now, guys, if that does worry you, you may want to hold off and not just sell yet and just average down. Once we come under the 1290, so you prepare yourself for the turnaround, guys, because it is going to happen. I wouldn't touch AMC shares at these prices just yet, guys, because this thing is headed to lower lows. But that isn't a bad thing, guys, because the lower the price is, the more shares you can acquire for the turnaround. And like I was telling you guys all the time, AMC short squeeze is over completely, okay? But it is money to be made when shorts cover, which cause buying pressure like we did receive from this $12.90 all the way to the 34.33. That's not shorts covering their whole demand zone. Not all shorts exited AMC. That's for a fact. No. But once they cover a lump sum of shares, guys, that does cause buying pressure.
Right.
Which causes retail investors to follow suit, pushing the stock even higher in price, which we received here at that 34.33. The lower the price goes, the more appealing it is for shorts to buy back the shares that they borrowed.
That's
which only can push the stock price up, which only is going to cause retail investors to jump it. In the act of FOMO and fear of missing out,
I'm just going
to so-called
interject here. Interjectory information, like that's what you see happen. That's exactly what you see happen here at these levels here, like this right here. It was down below $10, right around $10. Psst, shut up. Short covering. Not a short squeeze, recovering. And that's what we saw yesterday too. Wednesday. Here. Getting down this, $10 level. And it's a little higher. It's a little higher, yeah. So yeah, I mean, so far he's talking about trading it, so that's why he's talking about averaging down. Like swing trading. He's not talking about acquiring. It does not sound like he's talking about acquiring long-term positions, or obviously not for like a massive short squeeze, which he says is dead. So yeah, that's just, so far this is
mother of
okay
all short squeezing, causing the stock to rise even higher, and then repeat the cycle again, guys. Looking here at the estimated borrow fee for AMC, we know a month ago AMC estimated borrow fee. AMC didn't have a estimated borrow fee. It wasn't hard to borrow. Now AMC is now hard to borrow, guys. That is and will work in AMC's favor on the next run up. The run up may be pushing past 34.33 this time, guys.
Well,
all depending on how much of the major hedges, how much of their position they do cover. As you can see here, free floating comparison to the shares outstanding. It's not too many shares out there to even dilute AMC, guys. That lets us know that a lot of these shares are being held by what we call the retail investor, or AMC ape is what we call it. Now, taking that into consideration, guys, it is.
I don't know what that's supposed to mean. I've never heard that again.
Retail investor dilute AMC, guys. That lets us know that a lot of these shares are here they do cover. As you can see here, free floating comparison to the shares outstanding. It's not too many shares out there to even dilute AMC, guys. That lets us know that a lot of these shares are being held by what we call the retail investor, or AMC ape is what we call it. Now, taking that into consideration, guys,
no,
it is manipulated.
I mean, we know that institutions have, a couple $100 million, so not sure what that, free float and shares outstanding. I mean, difference there is going to be, yeah, they don't have any more shares to issue, but that doesn't indicate anything about who's holding the shares that are floating. So
Maybe
not sure about that one.
Of course. But that isn't our concern. Our concern is to make money on easy plays, guys, and the easiest way to make money on.
Yeah, Lynn, and he lost the thread, and he got it back. So he's, he's good at getting the ball back, recovering.
AMC is buying the stock right around the time when hedge funds start covering their positions. Okay, guys, and you will see a huge volume spike right away towards the end of the pre-market, guys, usually in the beginning of the week. But as you can see here, one thing about AMC, guys, what tends to hurt AMC day after day is the volume. Coming in on Friday's volume 42 million, being under its average. Day before that 53, under its average. Day before that 41. It is a little bit better than what we were receiving during this time frame, guys, but on the way down, of course, we're going to see more volume due to the fact that the volume on the rise up here, guys, was extremely high in comparison to what we were seeing in the past. But turnover rate looks good, but this thing is in a falling wedge, and I do believe this week we will be breaking sub $17 levels, guys. If you don't know what that means going under $17 even in AMC this week. But don't fear, don't panic. Take advantage, guys. If you're confident in AMC, you do want to take advantage once this thing bottoms out. And I do believe that the real bottom out is going to be under 1290 once this thing makes a turnaround like we did see here. A brief one here coming from that 1340 up to that $20. We see another rush up from the $20 here all the way up to 32 here, guys. I do believe that the bottom out is going to be under the 1290, and the next peak is going to be above the 3433, with shorts actually covering a huge amount of borrowed positions that they have held for quite some time. So, if you agree with anything I said in this video, guys, can you please leave a thumbs up on it? Also, consider joining our Discord, guys. We just had another great.
So, yeah, I mean, that's that wasn't bad, you know. I mean, it wasn't perfect. Nothing is, but I mean, a lot of good points in there, though. You know, the volume point. You know, that's basic market principle. Wherever you have these you know, big moves, you see increased volume. Makes sense. I think he said under this level, but he said the next push up would be like the 34 or whatever. That has not happened yet, I guess. But you know, you have seen a lot of these. You know, Wednesday was really the kind of the biggest one of those. Well, we had one back in May here, May 12th. So, you know, it's either at the beginning of the day, well, yeah, sort of, you know, there's a few different patterns, like intraday patterns that you see. Like Wednesday is just kind of a steady up. Today was an up, down, and, you know, revert to the mean, basically. Split the difference, go right down to the middle. Then you have the impulsive move down and sort of like drift sideways move. And then you have kind of just the drift sideways move. And you have the impulsive move up and impulsive move down. You know, you never know what it's going to be. And it's always a variation, but, you know, there's not too many different ways that it can happen in terms of institutions, you know, buying and selling. Because this is mostly algorithmic, you know, execution. They set it and forget it, basically. So, anyway. Are you buying AMC GME tomorrow or next week? Are you really asking me that? Why are you asking me this? Like, some people are just addicted to losing money, I think, or, you know, like unfulfilled hope. It's you know, it's your money. I don't care what anybody does, but yeah, next Thursday, that's it. That's the day, right? That's the executive orders. That's the executive orders. So, you know, good luck with that. All right, I'll do a final scan here and see Antoinette. So we watched a video that DJ Underground, I guess you had left a comment on one of their videos, and he showed the comment and answered or replied to you. I don't know if you saw that either here or on his channel, but it was about a lot of people not being millionaires or billionaires. I don't know if you're aware of that, but that is the case. It's in the Telegram chat. It's the one with him there with the sunglasses on. So. Yeah, no, what? I mean, it sounds like hope for a generation. No hope for a generation. It sounds like you just aren't listening to anything that I'm saying. Like, I don't understand how there's this, like, this cognitive dissonance here. Like, I don't think that we're all opening a position. No, I don't think that we are here. Because why would we? We're not running on hope. It is no hope. No hope for your generation. No hope. None. I mean, I can't comment on mine either, you know, but hey, yeah, you got winners and losers across all generations, but I mean, I don't understand. I don't understand why you are, you know, and take that religious shit out of here. You know, we don't care about the Bible. We don't care about your fairy tale book, all right? This is a fact zone. Fact-based, evidence-based thinking only. No place for that when it comes to the stock market, all right? Swear on the wrench. I trust a tool. I'll trust a, you know, trust a wrench. Hand tool. I think he's just a troll. You know, it's funny to come into a channel and just, you know, badger people. All right, you guys are actually buying AMC, even though you're making all these great points. Yeah, we looked at a lot of these videos already. Look, here's New York Kiev Angelo with his random number, 21,000. It started. How AMC will be paid? Well, we know that that's all on the blockchain. It's going to be the blockchain. Where's this mask off? What you call it? TMI. God, look at this. Tom Fudzulo. 325% cost to borrow. Nope. Randall Cornett. You don't see him much anymore. Looks like they're talking about payment for order flow. Oh. %, 120%. Wow. Citadel resumes squeeze. Like, short covering is not a squeeze. And that's all you're seeing. And the fact that you are seeing that, you know, I mean, it should be an indication like, hey, but, you know, I mean, the apes have been told shorts haven't covered for a year. And they, I mean, if I'm told something like that doesn't make sense, I mean, maybe it makes sense to them, but shorts haven't covered, you'll know when the shorts cover because it's a binary event. They either cover or they don't, and that's not true. But, you know, again, it goes back to market dynamics and just how this shit works. Dark pool suspension. Yeah, not going to happen. Obviously not going to happen. Payment for order flow myth explained by the guy who thought that something from fucking February was current. Short interest has exploded. I mean, it just goes on and on and on and on and on and on forever. There has to be some decisive thing. So that's why I said, if this executive order thing does not work out, which, you know, I think it's clear that you got a correlation with no causation proven, not even really suggested by the data, but whatever. There's a correlation, but that, you know, that doesn't mean that these things are linked. But if it doesn't work out, my challenge to the AMC influencers is this: stop hyping AMC. Because it's not going to squeeze. If it doesn't work out in June, then the executive order theory was wrong. The apes don't have the money to buy the stock in massive option contracts. They don't have that because of the overall position that we're in as an economy. And there's literally nothing, you know, there's no reason why it would squeeze, because the shorts can freely cover no squeeze. It's just short covering. So if it doesn't work out in June, you know, I mean, I know there's no YouTubers here, but that's what needs to happen, in my opinion. Like, it has to, something has to give here. I don't even see a lot of new stuff on here. It's all 2 days ago, 3 days ago. I think this thing's fizzling out. Theater was 97% full. Cool. See, and you know, this is there are plenty of reasons for that there. There's actually some good comment letters on a recent proposal from the SEC that go into that, but I don't have time for it now. This person liquidated their 401k. Cool. Still under the impression that retail is in charge. Okay. If the government paid you the MOAS money on one condition, that you continue to work a job in order to keep your MOAS money, and that you can't be unemployed longer than a year. Oh, okay. If 5 million apes just quit their day jobs, that could cause a serious problem. Maybe the government should do that. My second question is, what if the government took your money and issued you 20-year bonds at an interest rate of 1%? What are we in China now? Like what? You would get your MOAS money in 20 years. Let's say you made $500 million in MOAS money. The government would take that money, pay your state, then they would give you 1%, $5 million every year. I mean, what? Okay. So it's like, I guess the thinking there is like, okay, so they don't want it to squeeze because it's going to mess everything up. So what if we come up with an compromise? Okay. Okay. Consolidated audit trail will be live July 11th here. This is the first post-June executive order catalyst that I've seen so far. Consolidated audit trail will be live July 11th. If we squeeze before or after, it will definitely benefit the market. Okay. That's what they care about. Improving the market. How can this be legal? Oh, seller boxing is illegal. I haven't heard that lately. I haven't heard about seller boxing. Seller boxing. Jesus Christ. I mean, who cares about it? God. Nothing to see here. Move along. Nothing to see here. Oh, reverse repo, $2 trillion. Yeah. What doing? Yeah, what doing? Don't believe Melvin until Gabe is in prison. He should be put in prison. Jesus Christ. How about the ape should be put in prison? How about that? Like, you already messed up. His play was already messed up. So, why prison? Everybody should go to prison. Ken Griffin should be in prison. He broke the law. What law? He lied. Oh, okay. Okay, there's, you have evidence of that, right? Yeah. He lied to Congress. Because we have this transcript. We have this, Reddit lawsuit. Well, it's good that the apes are, they're using all their legal expertise there. And, also putting their arson investigation skills to use. They solved that one. Remember, they solved the warehouse fire. Yep. The deeper you push a basketball underwater, the higher it'll fly when it slips. That's a good analogy. And today they pushed 6 million shares deeper. At this point, we don't have to do anything but sit back and watch. One slip on their side, and the stock will fly. Okay, fair. It's fair. It's like a basketball. Yeah, makes sense. NFT incoming. Oh my God, they're doing another NFT. Oh yeah, for Top Gun. Out of sight, out of mind, sipping wine, someplace I can't hear you whine. You're too controlling. My chin is something you shouldn't be holding. You need to tuck your tail. You're a woman. No, this is probably a bad idea, but since I got the rest of the song here. To take me to jail, inconsiderate, selfish. When I open your legs, I smell fish. You talk too much to everybody. So flirtatious, so naughty. 12,000% borrow fee. God. Another day of trading sideways. Oh.
You don't trust me, I don't trust you.
Hell.
What we supposed to do? You disrespectful. I'll break your
Tinfoil hat. Tomorrow we moon. Here's why. Tomorrow is the start of the run-up. Backed by little to no evidence. As we know, none of the communication strategy under Ryan Cohen is random. Ryan Cohen is out for blood. He really loves fucking with short hedge funds on Fridays. Didn't somebody say, Model 3 dude, in the airport. All right. You're here for the end, my friend. Somebody said that Ryan Cohen would take response or something like that. I think Lynn did.
Don't provoke me, I might choke thee.
This is when the option chain has the highest chance to blow up. My memory is a bit hazy, but I believe the last few run-ups were Fridays too. No, none of the run-ups were on Fridays. None of the run-ups were on Fridays. That's completely wrong. Tomorrow's the 27th, which is the number of moons of Uranus. Coincidence? I think not. Oh my god. Look at all these awards. Jesus.
I'm in the studio, rocking it steady. I'll visit my daughter when I get ready. You full of shit.
The option chain blows up. Market makers will have to find shares next week. No, they won't. No, they won't. These contracts don't get executed or get exercised. The share split. There's no share split. There's a share authorization, but not an actual split that's been announced. Executive order. Yes, of course. Of course. Well, you know, we'll see. No shares available all day. This is not normal for GameStop. Holy shit. PSA announcement. The longer everyone holds, the higher the price goes. That's how a short squeeze gets squoze real hard like. If only it were that easy. Every pauper would be a king. Ryan Cohen will tweet tonight. It's going to be spicy. Let's just, can we just verify that? Did he tweet tonight? Is it just Ryan Cohen? I forget. All right, well, you know, thanks for the video suggestions. Oh, no tweet tonight. No tweets on the 26th. Well, shit. It may go live tomorrow night. Maybe over the weekend. The market's closed Monday. So I believe then the futures open Monday night. So we'll have to look at that and see. Make sure. Figure it out. Fidelity has been routing 24.63 buy orders through Citadel. Fidelity has been routing them through Citadel. Lots of retail investors transferred to Fidelity to avoid Citadel. And Fidelity appears to be in bed with them, manipulating the price of AMC. Oh, well. I think... Right, so I think people went to Fidelity because they don't accept payment for order flow, and that's pretty much what this shows here. Payment received for market orders, payment received for market orders, payment received for marketable limit orders. Any numbers that appear in these columns are negative, which means that they weren't paid for it. They actually provided a rebate, so that's not the same thing as payment for order flow. So and it's like a revision of history there. It's not why people. I mean, maybe it is why people did it, but you have to direct the order to the exchange you want. GameStop's NFT wallet marketplace unlikely to outdo larger tech companies in capturing gaming market, says Wedbush. We expect GameStop's cash balance to be exhausted in the next 12 months. Shares remain completely disconnected from fundamentals. All right, this is a good one to end on. This Derek Sivers bot tweet. Look at what your competitors are doing. Then vow not to do that. Don't try to beat them at their game. Play a completely different game. Be radically opposite. Don't be associated with them in any way. Be so different that people don't even think to compare you. I love that. I love that. So, I got to get off here. It's late. I'm running on fumes. But pretty good review of the Hall of Grifters. And Model 3 dude wasn't here before, so he probably hasn't seen the new Hall of Grifters. So we have some changes here. We have John Wick Snipe and MIA, hasn't been seen for several days. He hasn't put a video out in the last 3 days, apparently. And Manny says it's 24 hours to report somebody missing, so we're monitoring that. But if anybody does know anything, please call Florida Crime Stoppers and let them know. We need to make sure he's okay. Also, we removed CES Trades Wolfpack Alpha Wolf from down here because he's been shunned by the community. He's been shunned. So that's who knows who the next member will be that gets put there. But I just have to look this up because I want to know what's going on with Review Dork. He might be MIA too. I don't know what happened to him. Okay, so he's just talking about 1348. Cool. He's no longer an AMC grifter, I guess. I don't know. We have Al from Boston added to the Hall. He's now a member of the Hall. We also have, which we didn't notice before, but Thomas James. I did not notice that his shirt says bullshit. I thought it always said bullish, but apparently I zoomed in on it a little bit, and I noticed that it says bullshit. That's... I can't believe I didn't notice that before. Crazy, right? And then we have Faceless Clay down here in the lower left corner, too. We have Faceless Clay. Hello, my name is Clay. So it's we're filling this in here. Oh, you know what? That's actually a good point. The Commander 35 is not on here. That's who will go in the question mark. That's a good one. But we'll go check his we'll check his channel real quick here about that, and we'll update the Hall. Jesus Christ. I mean, look at this crap. This is like It's just, I mean, my God, do not autoplay that shit. Another day closer to AMC's judgment. This one right here, 2 weeks ago. Quite odd. I mean, it's a short, so.
All right. I'm pretty sure this is my last short of the day about Cuckwick. Just please tell me this is true. Can somebody confirm this? Cuckwick, did he really take a 20K loss selling out at $13 and then bought back in at 11 and then it tanked even more? And then you sacrificed and gave up and forfeited your tax savings you would have made if you went over the year mark of holding?
This guy's got problems.
It's not your double, triple, quadruple, all of those fucks back to back. Fucked. Yeah! I can't wait till we squeeze so you can get fucked by Uncle Sam right up the ass. Woo! All right. I'm pretty sure this is my last short of the day.
Okay, yeah, I can't. So there's a term for this guy. He's a stupid person. Like definitionally, he is a stupid person. So the 5 laws of stupidity, very fascinating. So if you provide benefits, if you do things that benefit yourself and benefit others, so benefit yourself, benefit others, then you're an intelligent person. If you do things that benefit others but hurt yourself or provide losses to yourself, then you're helpless. You benefit others, but you lose yourself. So that's, you lose, but you help others. If you do things to hurt other people and hurt yourself, you are a stupid person. Everyone loses. If you do things to hurt other people but help yourself, then you're a bandit. A bandit. So I think the Commander 35 is a stupid person because he is in this AMC thing, probably, right? And he's doing all this, putting out all this negative shit, insulting people, harming others. He's a stupid person. But the laws of stupidity, thing. I don't know who came up with that, but I like it. I like it. So, yeah. You know what? Let's do this. I'm going to do this real quick here. Go behind the scenes here for this one. So we'll get that that thing. So let's see. I have to go back to his channel, get a picture. I don't know. The bald is just like too weird, too freaky. Is there a normal picture anywhere? One of these would work. Work. How about with the radiation? He's toxic. Probably make Froggy a little smaller, maybe. It's gonna be tough to fit that in there. We get rid of Wall Street Bets guy. It's like a patchwork quilt here. Oh yeah, perfect. It's a patchwork quilt of grifters. Get rid of that question mark. Go. Okay. Okay. Back here. Back there. And there it is. Here we go. Perfect. The Hall of Grifters. Fat man, fat man, fat man. You don't know what you're talking about, fat man. Fat man, fat man. Nope. Now we may have to put out a Crime Stoppers alert for Big Man Speaks. Fat man, where are you? Fat man. I need to hear it. I need to hear it.
Yeah. Wall Street's is gangsters. They ain't gonna allow that player to go up. And the CEO ain't gonna do nothing about that. And the SEC ain't gonna do shit. People, you don't realize that stuff is getting real out here. I ain't gonna go into all the detail. You will have to go. I will have to tell you about the detail when I do my channel. But that fucking AMC.
Wait, he has another channel too?
Ain't doing shit. All right,
I'm making another channel. Fuck it.
If you got in like $53, $54, you ain't gonna never get that motherfucking money back. You can't beat them. You cannot beat them. The old saying, if you can't beat them, join them. Find the place they doing and do what they do. That's how you play the game. If they shorten the motherfucker, you short the motherfucker. That's how you make some money, people. Because that AMC bullshit, you know, I told people last year, they say, fat man, you don't know what the fuck you talking about. Okay, you see what they're doing. You know, I told people last year, they say, fat man, you don't know what the fuck you talking about. Okay, you see what they're doing. That thing might not get to $23 this year. Who knows? Like I said, it's gonna be a merry-go-round. It's gonna go around. It's a cycle. But you can make money with it. You play it right. But you better get in and you better get the fuck out. You know, once you blink your eye, that shit might be down. Yeah. Everything going up. Food prices going up. The only thing not going up is that damn AMC stock. GameStop ain't gonna do the same thing. You might got a better chance with GameStop than AMC, but both of them ain't going no fucking where. But you can make some money. You can make some money if you play it right. But once you blink your eye, you can't. You better keep your damn eye on that motherfucking monitor. Cause soon you blink your eye, this shit could go down. Go down. I keep it real on this channel. And if you like it, subscribe to my channel.
All right, this one's for Model 3, dude. Have a good night, guys.
I'm gonna scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock. Millions coming, baby. AMC stock. You want to be a millionaire? AMC, I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house.
This one will never not be fantastic.
I'm gonna scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock.
Oh my God.
Millions coming, baby. AMC stock.
What a pisser.
Be a millionaire. AMC,
pisser.
I'm an ape. They call me the ape father, baby.
It's a pisser.
You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house.
All right.
I'm gonna scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock. Millions coming, baby. AMC stock. You want to be a millionaire? AMC, I'm an ape. They call baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby.
This is it.
AMC in the house.
See ya.